So now we will begin with few standards. 230, beginning with audit documentation. I think chapter number 6. So what is this audit documentation? Whenever auditor does the audit, it is the duty of the auditor to maintain every details, every document, every workings in a documented form. Sir, why? Because there are so many advantages also. There are if you don't maintain there are documents, there are so many disadvantages also. So that is, it is better to maintain the documentation. So how do they maintain the documentation? For how much period? What should the documentation should consist of? All those things are given under SA 230 audit documentation. So audit documentation is nothing but record of audit procedures performed, relevant audit evidence obtained, and conclusions the auditor has reached. It is also referred to as working paper. So what is the benefits? Because evidence of the auditor's basis or conclusion in the report. When somebody asks you tomorrow, how did you give unmodified opinion? Sir, because see, this is the workings I done and I felt it is reasonable, then I gave the unmodified opinion. Evidence that the audit was planned, performed in accordance with SA and as per AFRF, as per applicable regulatory and legal and regulatory requirements. Companies Act tells that you do a company audit as per 143, 141, again 140, again multiple subsections of 143. So you document it, you tell that, yes, sir, I completed the audit as per Companies Act. Again you tell that, sir, we planned 10 people are there, 2 people are done this. You plan it, plan, program, everything has been documented. So it is the basis for opinion and is like a documentation. So for work as per SA and applicable legal regulatory framework ALRF. So what is the importance or purpose? This will assist the engagement team to plan and perform the audit. The moment you have the documentation, next year auditor comes na, he can see that, okay, which area I should focus, which area I should not focus, then they can plan audit accordingly. Assist the members of the engagement team to direct, supervise and review the work of audit. Again, enables the engagement team to be accountable for its work, because the moment you document, they might have written their name, they might have signed it. So the people will be more cautious compared to not having an accountability for anything. Retain a record of matters of significance to future audits. Whenever future audits are done, you can take this as reference. It will enable the quality control reviews and inspection to be performed. QR quality control reviews. For example, you remember the peer review we discussed, quality control review, where one CA firm will go and do the audit of another CA firm peer review. For that it is helpful. It will enable the external quality inspections to be performed, maybe in NAFRA, maybe QRB, etc. Yes? You are talking by yourself. Why? Okay. I thought ಮನೆ ಬಿಟ್ಟು ಬಂದಿದ್ರಲ್ಲ ಭಾಳ ದಿವಸ ಆಯ್ತು, so something has off. So what do you have to document? Form, content, extent of audit documentation. Document should be sufficient to enable an experienced auditor. So how much I should document? They're telling documentation should be sufficient to enable an experienced auditor with no previous connection with the audit. That means consider he was also an auditor, he was doing multiple other audits, similar type of audit, but he is not in any time involved in this audit. So if you give whatever workings you done to that party, he should easily tell that, yes sir, whatever the opinion you came, that is correct only. He should be try to make that. He should understand nature, timing and extent of audit procedures performed, including and the identifying characteristics of the matters tested, who performed the audit work, when it was completed, who reviewed audit work. Everything has to be understandable to an other than this auditor. The results of the procedures performed and the evidence obtained. The significant matters arising during the course of audit and conclusions list. You also have to document these things also. This year, employee did not give salary slip. No, none of the employee give salary slip. That means next year I should pay more focus on employee salary or compensation related verification. So the moment new auditor sees the old audit report, first he tries to check that compensation letter only. So these things. So what are the factors affecting the nature, content and extent of the audit procedures? depending on the size and complexity of the entity. If the size of the entity is too big, then obtaining the evidence is also a bit difficult. If the complexity of the entries are also too big, then that is also very difficult. Identified risk of material misstatement. If you remember the risk of material misstatement, inherent risk, control risk. So if you identify that, and it is very difficult, if the risk is very higher, how much you can document? It is not going to happen. The nature of audit procedures to be performed. What audit procedures you want to perform? Sir, I want to go for external confirmation, but the external party is also tampered. If you want to go for external confirmation, there is a chances that company might collude with that external party and come to some common conclusion. Even then, that is independent. You tell me how many external parties you want to contact. Sir, there are 1 lakh external parties who are there with the company. How much it is possible? Not possible. So try to be depending on the what type of audit process you are going to perform. That will decide how much documentation has to be done. Significance of the audit evidence obtained. If the audit evidence obtained is very important, then that is affecting I will get more assurance. If the audit evidence I am getting continuously is not reliable, then I don't get any judgment with respect to those things. Nature and extent of exceptions identified. Exceptions means deviations. Audit methodology and tools used. You should have used simple random method, but you use something else, or you should have used block sampling, other sampling, but some methods or samplings is being there. Then need to document a conclusion or the basis for conclusion not readily apparent from the audit evidence. So these are the few factors which are affecting the nature form, content and extent of audit documentation. It is important. See, this essay 230 will come for examination for around 5 marks in the examination. This chapter is 5 marks, only one standard on one chapter. And last one is, what are the significant matters? What is completion memorandum, and who is the ownership of this documentation? All those 3 things are being discussed here. First, documentation of significant matters and judgment. Whenever you go for the audit of something, what matters, you should mainly document what matters should be significantly considered and judgment. So matters that give rise to significant risk as per 315, identifying, assessing the entity and its environment by by understanding the entity and its environment. So result of audit procedures indicating that financial statements could be materially misstated, or that the auditor needs to revise their previous assessment of ROMM. They are identified earlier it is ROMM, but actually should need to revise it now as other than ROMM. He did not identify it as ROMM. Now he is required to identify ROMM. He has to change it. Revise their previous assessment of ROMM. Circumstances where the auditor faced challenges performing necessary audit procedures or found something that could change the audit opinion. For example, you later found out something after completion of audit. If that would have been found out earlier, you would have obviously given some other report rather than this thing. So depending on that, you have to document those significant matters and judgments. Completion memorandum. Completion memorandum is like, it is like an audit summary part. Whenever you complete what has been completed, describes the significant matters identified during the audit, identified fixed deposits, identified loans given, etc., significant, and how they were addressed. It helps in reviewing and inspecting audit documentation, especially useful for large and complex audits. A summary can help the auditor focus on significant matters and identify whether essay objective has been achieved or not. See, instead of reading 500 page, it is better to read 50 page in a overview basis. After which you find out problem in page number 20, 30, 31, 35, 37. Okay, go and read in detail with respect to those things. Then last one is ownership of audit documentation. Audit documentation is whose property? It is a property of the auditor. If he wants, he can at his own discretion make some extractions to the any other party. Now this is also important. Assembly file, audit file, assembly, changes and retention. What is audit file? Whenever the audit is completed and you give audit report, within 60 days from the date of audit report or group audit report, whichever is later, you should complete your audit file. That means you should okay, there are 10 pages, there are 10 things, you should compile everything and put it one place. Audit, we call that place as audit file. So in that audit file, everything has to be there. Once the audit file is completed and it is signed, you can't change it, you can't modify it, you can't add it, unless until they are administrative nature, or until they are insignificant in manner. This Compilation of audit file is itself not an audit procedure. It is just an administrative work. And for how much period you have to retain this? Huh? 7 years or 8 years? No shorter than 7 years from the date of auditor's report. Once it is final, you can't delete, discard, supersede documentation, sorting, collecting, cross-building, extra, etc. Okay, something is administrative nature, you can do these things. If it is other than administrative nature, then don't do that thing. That's it for essay 230. So now we will discuss essay 260, that is communication with the TCWG, only TCWG, not the management. See, there are certain things which has to be communicated compulsorily by the auditor. The auditor has some responsibility with respect to those things. First one is we should determine what is the objective of having the standard, as well as to which person should I go and communicate with. Can I communicate with the watchman? Can I communicate with the lower level person? No, not possible. We should communicate with the top person. Even in top level people also, we should even decide, should I communicate with CFO, CEO, CTO, CIO, any what person you want to communicate. So, to communicate clearly with the TCWG, the responsibilities of the auditor in relation to the financial statements audit and an overview of the planned scope and timing of the audit, what you are going to do it, and when you are going to do it, give it in a brief manner, not the entire details, so that they will be ready with the audit. To obtain from TCWG information relevant for the audit, if you want any questions, you can ask. To provide TCWG with timely observations arising from the audit that are significant and relevant to responsibility to oversee the financial reporting process. If there is any mistake with respect to preparation and presentation of financial statements, anyway that is the responsibility of management and that has to be overseen by TCWG. If there is a mistake, then you can communicate to those people. Then this will help a two-way effective communication between auditor as well as TCWG. Auditor only has to determine appropriate party to whom you want to communicate. If he feels he is the right person, he can go and communicate. What are the matters that has to be communicated by the auditor? Mainly, he should communicate auditor's responsibility. See, as an auditor, I have a responsibility to express an opinion, and my opinion is based on the information and details given by you people. And I assume that you are taking the responsibility for preparation of financial statements. All those things you have to tell it. Auditor responsibility. So, remember 210 and 700. In both the places we discuss that auditor responsibility, but not in detail we will discuss here. The auditor is responsible for forming and expressing an opinion on the financial statements that have been prepared by management with the oversight of TCWG. He is simply like he should express an opinion on the financial statements. It is his duty. Then audit of financial statements does not relieve management or TCWG of the responsibility. Just because auditor has audited financial statements, it does not mean that if you have prepared financial statements in a wrong accounting standards or maybe wrong applicable financial reporting framework, you are not relieved. You are still held responsible for all those things which you did wrong. Again, you should communicate what you have to communicate: plan, scope, and timing of the audit. So, auditor shall communicate with the TCWG an overview of the plan, scope, and timing of the audit, which includes communicating about the significant risk identified by the auditor. Now, what are significant findings from the audit? What are significant findings from the audit? There is no quantitative definition for that. It is up to the auditor to decide what is significant, what is not significant. The auditor's view about significant qualitative aspects of entities' accounting practices, including accounting policies, accounting estimates, and financial statement disclosures. You should communicate that with respect to significant qualitative aspect, not quantitative. Significant difficulties, if there is any encountered during the audit, that also has to be communicated to the auditor, TCWG. Unless until all the people are there in TCWG, TCWG is there in managing only, significant matters arising during the audit that were disclosed are subjected to correspondence, etc., etc. See, you communicated something to management, they did not agree. Now you want to go and communicate to the TCWG. What is the use? That TCWG itself is the management. That is what they are trying to tell. Circumstances that affect the form and content of the auditor's report. If there is any, for example, sir, I feel this statement is not correct. I feel this disclosure is not correct. Segment is information is not done. Presentation is done. Okay, communicate them. If any other significant he found out during that thing, he can continue to do that. Now, he should even communicate independence communication. This independence communication is applicable only for which companies? Listed entities. And written communication and documentation. Engagement team and network firms have complied with all the independence requirements. Independence means two types of independence, mind as well as appearances. All relationships, not yours, that they may have be thought to be bare on independence, that has to be communicated. Total fees charged for the audit and non-audit services provided by the firm and network firms of the entity and its components allocated to categories to assist TCWG to assess effective service and independence. You remember that I gave two examples. If as an audit firm you are giving audit services to one entity and you are giving other than audit service. When I say other than audit service, other than 144 services, 144 service anyway you can't give. Other service you are giving, and that other service you are charging some fees. That fees should not be more than the audit fees. First category. Second one is, sir, I am affiliated with some network entity, network enterprise, big 4 or maybe big 5, big 10, something like that. Then one of, okay, whenever you are giving audit to a client, every entire firm put together should not charge anything more than 3 times of the audit fees being charged for all the other services. That is what this provision is talking. And any safeguards applied to eliminate or reduce the threats to independence, that can also be communicated. What is written communication? Communication and writing about significant findings from the audit. Oral communication is not adequate, significant findings, because people can change immediately. Then documentation, everything has to be documented and kept at a safe custody. This is 260. You can go through this summary form. Now we will discuss 265. 265. 265 is talking about communication of deficiencies in internal control to those charged with governance, that is TCWG. See, this 265 and 260. 265 is an extension of 260. 260 is also talking about communication with the TCWG or management. But 260 is talking only to the TCWG. Here, management or TCWG, both are there here. But deficiency. So, what is this deficiency? Whatever that is supposed to be there is not there. Whatever it is required not to be there is actually there. Deficiency. I can take it as a first example. Whatever is required for the purpose of controlling what is theft, pilferage, all those things, CCTV camera, security guard is not there. That is an deficiency in internal control. Internal control has to be there to protect all the assets and all those things. That is not there. That is why we call it as deficiency in internal control. See, as an auditor, external auditor, I am not responsible for checking all those things. I don't want to check also. But while I'm checking, if I find out some deficiencies in internal control, I update you. If I don't find out, then don't expect me to find out and update you. My purpose is not to finding out internal deficiencies. My purpose is do the audit. While doing the audit, I find out some deficiencies in internal control, then I'll try to update with respect to you those things. Then, if not, no, I'm not going to update those things. That is what main purpose of this 265. So it deals with auditor's responsibility to communicate appropriately to TCWG and management deficiencies in internal control identified during the audit. While you are doing the audit, if you identify some things, you just talk to them. What is deficiencies in internal control? That means whatever the control which is required, that control is missing. Control to necessary to prevent, detect, correct misstatements in financial statements is missing, or whatever the control, everything is there, that is being implemented, everything that is unable to prevent, detect, correct or misstatements. One is there but not able to correct it or prevent it. Second one is not there only. So significant deficiency in internal control means any deficiency which wants to get the importance for attention of TCWG. That means that is very big. Then only TCWG will look into those matters. The significance of deficiency in internal control depends not only on the whether misstatements has actually occurred, but also on likelihood that misstatements are occurring. Not see call it as a misstatements. It does not need to be already a misstatement occurred. If it is going to be occurred, then also it is called as a misstatement in deficiency in internal control. So communication requirements. He should communicate to the management or he should communicate to the TCWG. Depends. If there are certain internal deficiencies are there that can be directly communicated to management and got sorted out, then you do that. If there are some deficiencies which is out of the control of the management, which is actually required to be given, what is this, informed to the TCWG, you have to compulsorily go to the TCWG only. So the auditor shall communicate in writing compulsorily significant deficiencies that auditor has communicated or intends to communicate to TCWG unless it is inappropriate to communicate directly to management. ಯಾವ ಮ್ಯಾಟ್ರ್ ಅವರಿಗೆ TCWG ಕಮ್ಯುನಿಕೇಟ್ ಮಾಡಬೇಕಂದ್ರೆ ಮ್ಯಾನೇಜ್ಮೆಂಟ್ ಕಮ್ಯುನಿಕೇಟ್ ಮಾಡಿದ್ರೆ ಯೂಸ್ಲೆಸ್ ಅದು ಅವ್ರೇನು ಆಕ್ಷನ್ ತೊಗೊಳಕ್ಕಾಗಲ್ಲ ಅಂತ ಮ್ಯಾಟರ್ ನೀವು TCWG ಕಡೆ ಹೋಗಬೇಕು. And other deficiencies in internal control identified during the audit that are not been communicated to the management by other parties and that are sufficient importance to management's attention. If you feel other attention misstatements, you communicate with them. The auditor shall also include in written letter. You also give something called as letter of weakness. Letter of weakness you should give it as internal control deficiencies. A description of the deficiency and an explanations of their potential effect. Okay, sir, watchman is not there. Inventory is continuously being stolen by the employees. So if this continues, the potential effect. Potential means possible effect could be some 10 crore rupees on a yearly basis. And sufficient information to enable TCWG and management the context of communication. That means you should give such information that is sufficient so that management as well as TCWG understand, okay, this is the problem, we have to do this thing for this thing. That's why it has to be there. Then in particular the auditor shall explain that the purpose of the audit was to express an opinion on the financial statements. See, my purpose is not to identify, detect the internal deficiencies. My purpose is to express an opinion on the financial statements. The audit included considerations of IC, but not for the purpose of expressing an opinion on the effectiveness of internal control. I am giving those reports for you to take some actions. I am not giving any opinion on that whether they are working correctly or not. And the matters being reported are limited to those deficiencies that audit has identified during the audit, not auditing for those things only. Some examples are indicators with respect to significant deficiency in internal controls are ineffective control environment. Control environment is only not there. Somebody is coming at 10 o'clock, somebody is coming at 11 o'clock, somebody is going for lunch at 2 hours, then it is ineffective control system. Or absence of risk assessment process only. How do you identify the risk? That process only not there in the company. Ineffective entity risk assessment process, it is there, but that is ineffective. Or ineffective responses to the identified significant risk. Yes, identified the risk, but management told, okay, it's okay, they are my people only, let them go out. That is what they are trying to ineffective response to the identified significant risk. Or misstatement is not prevented or detected, or disclosures in MMS, material misstatement as prior period items. That's okay. 265 is that's it, nothing else. You should just go through this 265, not so important from examination angle also. They may ask, I'm not denying that they'll not ask, but you just have a glance about this thing because there are many other standards to be discussed here to ask in the examination. Good morning. So, as we are almost near to the end, now we will begin with essay 300, the planning of an audit of financial statements. Sir, what is this SA 300? SA 300 is mainly talking about planning part. Sir, what is this planning? Whenever you want to do an audit, it is better that you plan initially, then you conduct the work, so that the work will get completed within the allotted time. You can express an opinion based on the planned things if it is getting completed. So first of all, what is planning? Planning in simple terms, it consists of three elements here. It consists of three elements. One is plan, second one is strategy, second one is plan, third one is program. Audit strategy, audit plan, and audit program. This planning and this plan is entirely different. Audit plan is part of audit planning. Audit planning is a broader structure in which you do all the three activities: strategize, plan, and programize. But what is plan? Plan is a part of the total planning in which you try to plan in a detailed way those things. First, we should understand, sir, what is the difference between strategy, plan, and program? Sir, what is audit strategy? Audit strategy simply means that uh, trying to understand or set the overall scope of the audit. It is like a narrower category. That means, okay, I will do this audit, this audit, this audit. Consider we will complete the entire audit within 50 days, out of which 10 days for sales, 10 days for purchase, everything. The moment I tell this is called as audit strategy. You try to go more in-depth and detailed analysis. For example, okay, first 10 days it will be done the sales, again next 10 days it is purchases, next 10 days again it is assets and liabilities. This is strategy. If you go in deeper and tell that, okay, person A is going to do the sales, again that is being reviewed by person B, again that is being ultimately gone to the engagement pattern. That means the moment you go much deeper and deeper or detailed elaborated processes, that is called as audit planning. Plan. Strategize, overall planning, plan, overall setting the overall objectives of the audit. Then again, if you elaborate in a more detailed manner, then it comes as audit plan. Now, what is the difference between plan and program? Program is something which consists of much more detailed procedure, like what methods you are using, what type of sampling you are using, what type of reporting you are required to do this. So audit program is much more detailed manner. If I put it in this hierarchical format, so the top category, broader category comes as audit program. A much simpler version of the program is audit plan, and much simpler version of the plan is audit strategy. Strategize first, then plan it, then program it. Program contains the persons, the methods, the again methodology, again what tools are being used, is it automated, is it manual, everything is being detailed in that. So planning an audit involves establishing the overall audit strategy for engagement and developing an audit plan. Engagement and developing an audit plan. Planning is not a single activity, it is a continuous process. For example, you planned in the beginning of the audit, but later you found some other evidence which is not there in your plan, because of which can you require to change or can you continue? Yes, you have to continue compulsorily change and you do the process. It is an iterative process throughout the engagement. Iterative means repetitive process, that is throughout the engagement. What is planning? Planning an audit involves establishing the overall audit strategy for the engagement and developing an audit plan. It is an overall strategy to develop an audit plan. What is the benefits of planning? You tell me, because we can plan the number of days is being completed, which work has to be focused, that can be understood, who has to do that work, who has to support that work, who has to review that work, all those can be taken. Again, which team members has to be the part of this thing, what tools can be used for the purpose of conducting an audit. All those things are some benefits of planning. This is important. This is examination tested. What are the benefits of planning? Appropriate attention to important areas can be given. Identify and resolve the potential problems. Potential means what? Future or possible. Conduct efficient and effective audit. The moment you plan, there will be an efficient and effective audit. If you don't plan, for example, even when you are studying also, when you want to study for examination, you don't plan. You open now accounts, again after half an hour you open some law, again you open something else. That means it is entirely chaotic situation. Try to plan it. Okay, so first 5 hours I study accounts, next 5 hours I study law, then again I will study taxation. Then it is much more better manner, efficient and effective type of things happen. Again, it will help in selection of a team member, direction and supervision of team, and review of the work, and coordination with the other auditors and experts. In mainly in case of SS 616, if you are auditing a company which has a subsidiary or branches that is being audited by some other auditor, then that has to be coordinated here. Again, experts, if you are taking any person's help. Planning is a continuous process. Planning is not a discrete phase. Planning is does not mean that you're doing at a single point of time. Whenever you find some evidence that is making you to change the plan, definitely have to change the plan and continue. Planning is not a discrete phase of an audit, but rather an continual and iterative process that often begins shortly after the completion of previous audit and continues until the completion of the current audit assignment. Last year audit completed by 31st, maybe 30th September. In that AGM, you will be appointed as an auditor, or if you are continuing, maybe the auditor. So then start the audit of current year, then it completes till the audit report has been given. The activities to be completed prior to the further audit procedure. Analytical procedures to be applied as a risk assessment procedure, RAP. Whenever you want to understand, as per SA 315, how do we understand the entity, its risk through its entity and its environment? So we try to do analytical procedures. What is analytical procedures? 520. It is establishing a plausible relationship between financial and non-financial data that is there. Then obtaining a general understanding of the legal regulatory framework applicable to the entity and how the entity is complying with that framework. First of all, you see what entity you are going to audit. Sir, I am going to audit SBI. That means, okay, the legal regulatory framework applicable is Banking Regulation Act, SBI Act. Again, income tax, not income tax, income tax is also applicable. Information technology also applicable. PF Act, ESI Act. There are many companies act, many acts are applicable. You better know that. Determination of materiality depending on the benchmark you are selecting. For example, you are selecting benchmark as sales, then materiality will be different. If you are selecting profit as benchmark, then materiality will be different. Do you need the involvement of expert? Experts are required. Then yes, then continue. Performance of other risk assessment procedures. Anything which you feel necessary, that has to be performed. So the engagement partner and other key members of engagement team in planning the audit draws on their experience and insights, thereby enhancing the effectiveness and efficiency of the planning process. That is better to, you don't send all the new fresh parties, try to send some experienced parties so that they have how to they know how to plan, because they already have the knowledge of the entity, maybe industry, maybe regulators. That is why you should involve the key management personnel. Then comes preliminary engagement activities. This is also important for 5 marks. What is preliminary engagement activities? Before you start the audit, you have to do these things. Preliminary means beginning, before starting the audit. So you have to first check 3 things, mainly 3 things. One is continuance of client relationship. If you remember SQC1 and SA 220, we discussed one of the element as the acceptance and continuance of client relationship. That has to be checked here. After that, you should evaluate the compliance with the ethical requirements. Are you complying with your ethical requirements with respect to Institute of Chartered Accountants of India or not? You have to check it, because you should not be holding as per section 141 prohibited. So disqualifications are there. 144 prohibited services are there. There are so many disqualifications. Are you eligible to accept this thing or not as per ethics? Again, ethics chapter also we discussed. Fundamental principles compromised. Independence is not there. Threats to independence are there. Then last one is you should establishing understanding of terms of engagement. What is terms of engagement? What is my scope? What is your scope? What is the fees? What is the responsibility? Everything you have to establish before you start the audit. 3 things. Whether should you accept the client or continue the client. Second, evaluate the compliance with ethical requirements. Third one is you should first establish the SA 210 terms of engagement. This is SA 210. First one is, sir, how do you decide whether the client should be continued or not? Performing procedures regarding the acceptance and continuance of a client relationships, including the same points which we discussed in SQC1 is being there here. Integrity of the principal owners and key management. Are they cooperative or not? Are they doing fraudulent activities in multiple times, multiple companies, multiple places? Then you consider that. Competence of engagement team to perform the audit engagement. Okay, everybody is good, but are we competent enough to take that work? Then only we accept the client. If not, don't accept the client only. You never did the bank audit. Now your bank has come to you. Should you accept the client? No, you should not accept the client. You try to bring some expert and start the audit, or refer to some other firm which is having the expertise in that. And again, implications of the matters that have arisen during the current and previous audit engagement. If before you start the audit, check the previous year audit report. Check, okay, sir, key audit matters are there, modifications are there, basis for everything is there. Try to first see that all the things are resolved or not. You consider these things before you start the current period audit. The first one is the continuance of client relationship. Check the integrity of the principal owners, check the competence of your team, and implications which are arising in the previous audit as well as current audit period. Then, sir, how do you evaluate the ethical requirements with respect to accepting? The auditor shall continuously evaluate compliance with the ethical requirements, including the independence. See, it is not just at the beginning. You started the audit, later somebody has purchased the shares of that company, you should immediately resign that audit. I should immediately come out of the audit so that other partner can go and do the audit, because you are already falling under the disqualification of 141. More than 1 lakh rupees face value if relatives purchase before means okay, you can reduce it, but after you accepted the assignment, then later somebody has purchased it, you should take some corrective action. It is not just a single point of time, it is continuously you should evaluate the compliance with ethical requirements. Again, you should remain alert for evidence and non-compliance by engagement team members. Then again, obtain relevant information to identify and evaluate the circumstances and relationships that create threats to independence. Okay, you remember that 5 independence, maybe somebody is threatening you, somebody is influencing you, somebody is what is this? Because you are long term already doing the audit with that company, because of which long association is there, that should not be eliminated. Or maybe some of the somebody is threatening you, physically intimidation is happening, or familiarity, something is happening. If you try to identify initially only, if you find any of the things which are present with respect to threats to independence, then don't accept or resign it. Take appropriate action to eliminate or reduce threat to an acceptably low level by applying the safeguards, maybe reduce the shares, all those things. Our engagement partner shall promptly report to the firm if any inability to resolve that matter. If he is not able to resolve that matter, okay, go to the firm, tell to the firm, see, I am ineligible to accept this audit engagement, then you better do something else. You try to check this ethical requirements. Then last one is terms of audit engagement. It is like mainly deciding the scope of things. It is the interest of both the entity as well as the auditor that auditor sends an audit engagement letter before the commencement of the audit to help avoid misunderstanding with respect to the audit. It is better ನೀವು ಮದುವೆ ಆಗೋಕ್ಕಿಂತ ಮೊದಲೇ ಜಗಳ ಆಡ್ಕೊಂಡ್ಬಿಡ್ರಿ, ಮದುವೆ ಆದ್ಮೇಲೆ ಜಗಳ ಆಡೋದು ಬೇಡ. That is what they are trying to tell. You try to if there is any what is this misunderstanding between you and the management and the company, better to resolve at the beginning phase only. If that is being resolved, and okay, you can have a longer relationship. But if that is arising at a later point of time, ನೀನು ಅದನ್ನ ಮೊದಲು ಹೇಳಿಲ್ಲ, ನೀ ಅದನ್ನ ಮೊದಲು ಹೇಳಿಲ್ಲ, you did not tell it at the first time, then that heart breaks at a very damage will be very, very huge. That is why it is better that beginning only you decide that. It ensures that there is no confusion with the client regarding the terms of engagement. What he has to do, the responsibility. The client also thought that okay, auditor only will come and prepare the financial statements and do the audit. No, what nonsense! You have to prepare as a management the financial statements. Auditor will come and audit the financial statements. He will not prepare the financial statements. That is why you should better clear all those things in the beginning only. You don't wait till the end of audit. These are the preliminary engagement activities that has to be considered. Now comes the audit strategy part. Audit strategy. Sir, what is audit strategy? It will set the scope, timing and direction of the audit and guides the development of more detailed audit plan. See, just because strategy is there, that is helping you to go for next level of audit plan. If there is no strategy, then plan would also look like strategy only. So, strategy is important. But whenever you want to establish the overall audit strategy, the auditor shall consider the following items. First one is, he should identify the characteristics of the engagement that defines its scope. Okay, whatever you are supposed to do. If you remember, I said 200, we discussed what is including in the scope, what is not including in the scope. You should not prepare the financial statements, all those things. You should first decide. Then ascertain the reporting objectives of engagement plan, the timing, nature and communications required. Okay, how do you report it? What is your reporting objectives? Because I should complete it, either I should give the modified, unmodified, I should give the report. And engagement so that you can plan the timing and nature of communications required. Okay, as per SA 260, I have to communicate to TCWG, so I'll communicate in the 30% of the work is done, again 70% of the work is done, then I start communicating with those things. Then consider the factor significant in directing the engagement team's effort. Okay, whenever you appointed, you have 10 team members, you decide, okay, the senior people will do what type of work, the junior people will do what type of work. Okay, once the work is done, who is going to review that? You have to decide how you are going to put your engagement team efforts. Then consider the results of preliminary engagement activities. In the first 3 points we discussed, just now we discussed continuance of client relationship, ethical requirements, and the terms of engagement. If you find any difficulty, try to consider in audit strategies. So you focus on those areas and strategize in such a way. If there is no risk in that, okay, you don't focus mainly on those areas. You can ignore that. Ascertain the nature, timing, and extent (NTE) of resources necessary to perform the engagement. Okay, you after analyzing every strategy, you decided, okay, sir, I need 20 people, I need 30 people. Okay, accordingly you have it. So, what is the outcomes of audit strategy? It is a process assisting the auditor to determine the resources to deploy for specific audit areas. Whatever the results you get of by way of audit strategy, then you will decide deployment use like category. So which areas, which resources has to be used for what areas? Okay, sir. One senior is there. He is very expert in bank audit. He was a bank manager for last 30 years. Later he did the audit for 20 years. So he is very experienced. Okay, I'll use him for reporting purposes because that is very important. Then the amount of resources to allocate to specified audit areas. How much resources has to be allocated? Then when the resources are to be deployed, okay, what is, are you going to put them everybody in the beginning? Are you going to put everybody in the end, in the mid? No, sir. Okay, first a few days, maybe 3 days only watching are there, so I will deploy only the article assistants in that, so that they will go and verify. Later that we will send the senior party, so that they will go for balance sheet, P and L, all those things are being taken care. How such resources are managed, directed, and supervised? That is the continuation part. That is what we call it as audit strategy. Then comes audit plan. What is audit plan? Once the strategy is established, then audit plan is developed to address the various matters identified in the overall audit strategy. For example, you decided, okay, these are the areas we should put. How do you address it? That is being discussed in the plan. The audit plan shall include the description of NTE of planned risk assessment procedures as per 315. Then the NTE of planned further audit procedures at the assertion level. What is this NTR, the risk assessment procedure? To identify as per SA 315 what risks are there, where, how can you tackle that? What is second point at assertion level? Whenever you decide, okay, you saw some problems in one item, maybe inventory, maybe PP, maybe liability, maybe equity. So how do you address that at the assertion level? Assertion means individual items level. Then other planned audit procedures required to carried out so that engagement complies with the standards on auditing. For example, you are doing an audit. In the planning, you decided you want to communicate to some third party. How do you communicate that? Okay, talk to the management. Management will send a request letter to that party, so that the party will communicate directly. USA 505 follow that. Whatever the standards are required, you continuously do that. What is the relationship between strategy and plan? I'm not going to read this. Strategy is an overall approach. Much more detailed approach is plan. You can go through that at a later point of time. Then changes to planning during the audit. Can you make changes to the planning? Yes, definitely possible. Because earlier you thought something else. Later the evidence you obtained. Earlier you thought the management, everybody was honest. Later it turned out to be every management is involved in the money laundering activities. Because of which you should consider your planning. Earlier you thought sales was entirely free from material misstatement. Later you found out, you verified 10 invoices, out of which 9 invoices are material misstated. Oh, what nonsense, 90% misstatement is there. Okay, you should change your plan and do some other actions. Don't follow the old methods. So, the auditor shall update and change the overall audit strategy and audit plan as necessary during the course of audit as a result of unexpected event, maybe some fire broke out, something has happened, adjustable event has come, maybe as per AS4. Changes in the conditions or audit evidence obtained. You obtained some audit evidence that turned out to be totally wrong. Then you talk to some external party, they are given totally other information. Oh, then I should change my plan and I should do some other alternative audit procedure so that I can get my this thing. Direction, supervision, review of team members. How will you decide that? NTA of direction, supervision, review of team members varies, depends on the size and complexity of the entity. If the size of the entity is too small, okay, no need to review. They'll only do the work and they'll directly come to the office. If the transactions are very simple, cash to sales, again purchase to cash. If this simple transactions are there, okay, complexity is not there. That can be taken care. The areas of audit. What areas of audit? What do you mean by area of audit? Is it in Baswangudi, Rajajinagar? Is it? No. What area? Are you doing what? Start audit? Some what type of audit you are doing? That has been considered here. The assessed risk of material misstatement. Okay, you identify some misstatement is a risk of material misstatement. You assessed it. Company did not tell you assessed it. Depending on that, you have to decide whether supervision is required or not. Capability and competence of team members. If the team members are very strong enough, knowledgeable enough, then you there don't need you to be there with them. If they are not competent or strong enough, definitely you should continuously review them. Then whatever you do, auditor shall document. This is important. This is also being asked for 4 marks, or I'll put it as 3 marks. See, everything is important. One 5 marks question will definitely will come. 5 to 6 marks questions will come in essay 300 only. You should document total strategy, total plan, and if there is any changes made during the audit engagement from the last, again because of the evidence available, then you have to do that. Then comes last, the audit program. Audit program. What is audit program? It is same only, but it is in a documented written format, much more detailed work. Audit program is detailed plan. It is a plan, but detailed plan of applying the audit procedures to obtain sufficient evidence to enable the auditor to express an informed opinion on a company's financial statements and accounts. It consists of series of verification procedures to be applied in the given circumstances. The purpose is to accomplish the audit objectives. The main, whatever you do, the main purpose is what? You get reasonable assurance, express an opinion. That is what your main purpose. That is what you have to do it. What are the points you have to consider? We should evolving one audit program is not practicable for all the business. That means you earlier you are doing one construction business audit. Now you got an maybe real estate, not real estate, maybe educational institutions. Whatever the program you had for or plan you had for construction, you can't apply for same things. It is entirely different set of thing. So because of the nature, size, and composition, it varies. You have to change it. The bigger entities, you might be having a very detailed plan. For a smaller entity, no need to have so much of detailed plan. There should be a periodic review of audit program to assess whether continuous to be adequate. That means you prepared an audit program maybe 3 years back. You keep on reviewing that. Don't apply the old outdated procedures only. If it is relevant in the current scenario, then keep on updating, applying it. If not, update it and apply it in the current scenario. Then constructing an program. Stay within the scope and limitations. Prepare a written audit program. Determine evidence available. Apply on only useful procedures. Okay. How do you construct? Depending on whatever the things you do it in risk assessment procedure, preliminary engagement activities. Then check SA 200 objectives, inherent limitations, again scope of audit, everything. Then you prepare one audit program. This is important. What are the advantages of audit program? This is also important for 4 marks. It provides clear instructions for the work to be done. Okay, you go and do this work, you go and do this work, you go and do this work. This will give the clear instructions. It provides a total perspective of work to be performed. Okay, what I have to perform, what I should not perform, because it is an entirely detailed plan. Selection of assistants on basis of capability becomes easier, because the moment you have a detailed plan and you identify one area as very difficult area, then you can select such team member who can handle such situation. Prevents danger of ignoring or overlooking certain books as well as records. Okay, other than it, okay, we'll leave it. No, if the moment it is in written document, that will be helping you to retain that and you can do those works. Okay. Assistants accept responsibility for the work carried out by them, because the moment it is in writing form and you allocated some work, you tell that, okay sir, I did this work. Okay, that means they are accepting the responsibility for the work they have done. Principal can control progress of various audits in hand. Then serves as a guide for audits in succeeding years. The moment it is in a written document, okay, you are not there in the auditor form. Okay, new auditor comes, at least he reads the program, plan, strategy, everything, so that he can do the current year audit. And serves as an evidence in the event of any charge of negligence against the auditor. That means if somebody tells that you did not do the audit as per the standards and auditing, you did not do properly, okay sir, take this my program, take this my plan and verify. See, these are the things I verified. I felt this is sufficient for the doing audit of every entity, so I did it. So it serves as an evidence for all those things. some disadvantages are also there. It becomes mechanical because it is, see, whenever you go for some Domino's or McDonald's, they have very proper system. They should fry what is this, potato fries, French fries at a certain degree only for certain minutes only. You should put so much of salt only. So when you do, you are not supposed to use your mind. Even a dumb person goes, okay, just follow the procedures. That because of it, that becomes mechanical. Mechanical means doing the same thing again and again. You get bored. Like teachers become teaching the same thing again and again and again. Disadvantages, you can read this. This is entirely about SA 300. Very important standard, as well as highly important from examination area. ICA will traps you in this with respect to the moment they ask what are the advantages of audit planning. That is different from advantages of audit program. So you should be careful with respect to it. So now we will begin with SA 315. See, before you begin the audit, it is better to identify and you should assess what could go wrong if you start the audit. The material misstatement areas, risk of material misstatement. Sir, what is material misstatement? As we already discussed in beginning fundamental chapters, misstatement means something difference between amount classification, presentation or disclosure of reported financial statements and amount classification, presentation or disclosures of applicable financial reporting framework. So material means something which influences the user's decisions is called as material. That is as far as 315. So you should identify such areas which will cause the users to change their decisions with respect to continue with the entity or not. You should again assess that, and response to that, all those assessed risk will be discussed in SA 330. So SA 315 is just identifying and assessing the risk of material misstatement. So identify and assess the risk of material misstatement, whether due to fraud or maybe error. When I say fraud, fraud can be two things. One is fraudulent financial reporting or misappropriation of assets. These are two things. Or errors at the financial statements level or at the assertion level. What is financial statements level? As the financial statements as a whole, assertion means as maybe individual items of the financial statements. Through understanding the entity and its environment, including the entity's internal control. You should understand all those things so that you can come to a common conclusion with respect to those things. Sir, what you have to do it? You have to do the risk assessment procedure, RAP. Sir, how can I do the risk assessment procedure? You can do such procedure to obtain an understanding of the entity and its environment, including the entity's internal control. Whatever you feel, any procedure, you do such procedure. Read the MOA, AOA, read the regulatory information, read the last year financial statements, read something. Try to get the entity's information and its environment, including the internal control, how it is being operated. You should try to identify, auditor should obtain to identify and assess the risk of material misstatement, whether due to fraud or error at the FS or at the assertion level. Then whenever I say risk assessment procedures you have to do, what risk assessment procedure you have to do? There are 4 risk assessment procedures. If you see, there are 7 type of procedures getting evidence. One is, which we discussed in SA 500, 7 methods of getting audit evidence. First one is inquiry, then observation, then inspection, then analytical procedures, then external confirmation, then recalculation and reperformance. 1, 2, 3, 4, 5, 6, 7. So we are trying to identify the entity by understanding its we are trying to identify and assess the risk of material misstatement by understanding entity and its environment. By inquiring to the people, can we identify to the employees, to the management, what risk can be there? Yes, inquiry is there. By observing, can we do that? How they are counting inventory, all those things? Yes, sir. Just by looking, are they honest people? Are they doing work properly? Yes, it can also be done. By inspection also, can we do it? Yes. How? Inspection of mainly documents. Working is part of observation category. Inspection means inspection of documents, whether authentic documents, whether genuine, fake, all those things. Yes, you can do it. Analytical procedures. Yes, financial and non-financial, trying to identify that. Yes, that can also be done. Check with external confirmation. External confirmation means talking to some outsider. How can you get information of entity by talking to outsiders? You can get an information of an transaction which is being carried out with the outsider, not with respect to everything. Yes, that is not possible. External confirmation. Recalculation and reperformance is also not there because they are mainly for arithmetical accuracy category of things. Whatever that is being done, that has to be done. That is why there are only 4 methods of performing the risk assessment procedure: inquiry, inspection, observation, and analytical procedure. Sir, when I say inquiry, inquiry is not just to the inquiry of management. You can do the inquiries of management as well as others. Others means any party. You can do the inspection also, inspection of documents and all those things. You can do the observation also, how they are counting the inventory, how they are trying to give the instructions for those things. Then as far as analytical procedure, these are the 4 methods which are available as per 315. Total 7 methods are there for 500. There are 4 methods are there for 315. Then how do you do it with respect to inquiries with the management and others? These are important. This discussion procedure important for 5 marks, or they may ask any point for 4 marks. Now, auditor should obtain information through inquiry of management and individuals responsible for financial reporting. Inquiries detected towards what? Directed towards TCWG. Okay, you can talk to the TCWG. Sir, have you taken responsibility, oversight of the preparation of financial statements? Yes. Internal audit personnel, about designing and effectiveness of entities internal control. You talk to the internal audit team. So whatever I came now, but you are doing audit from last 1 year now. What did you feel about the internal control system? Is it sufficient? Do they need to change? You do the inquiry with respect to those people also. You can talk to employees also who are involved in mainly financial part, recording complex transactions, how what procedures you are following, why this assumption is being taken. Okay, you can talk to employees. You can talk to in-house legal counsels also with respect to legal compliance or litigation matters as per SA 501. Or you can talk to even production, marketing, sales and other personnel also. You can talk to salesperson, marketing personnel, tell that marketing personnel why this expense of marketing is being continuously being increased. Sir, because competition is too high, people are shifting immediately. If we are not visible for some period of time, people will forget us. That is why so much of expenditure is being happening in the marketing team. Okay, that's okay, no problem. Then again comes sales personnel. Why sales is coming down year on year? Is there any problem? Yes, sir. Airtel people are come down because Jio users have started increasing. Vodafone idea has come down because of the Geo. So you have to inquire with management and others. Others means anybody, TCWG, maybe employees, maybe in-house legal counsel, or maybe any company, any person who you feel necessary to communicate. Then, sir, how can I do the analytical procedures? Analytical procedures means you remember that understanding the entity through identifying the relationship between plausible relationship between financial as well as non-financial data here. That is analytical process required during the audit planning phase. Yes, at the planning also you have to identify how it has to be there. Auditor can gain insight into the entity and identify areas that may pose significant risk. Okay, then effective in detecting unusual transactions or events, you should do such work. For example, if you remember that 100 employees for 10 lakh rupees, if now 80 employees are there, now 8 lakh has to be there generally, but it has to be 12 lakh rupees. That means unusual transactions are there. Maybe they appointed on top level people because of which the salary is more. Results of high level analyticals procedures are only an initial indication on whether there may be any significant misstatement. You don't start doing that high level analytical procedures. You generally do the normal procedures, but the moment there is some indication that significant misstatement might be there in some area, then try to do some high level analytical procedures. You apply maybe AI related tools, all those things. How do you do the observation and inspection? Observation of the entity's activities and operations. Inspection of documents, maybe business plan, strategies, records, internal control manuals. Read reports prepared by management as well as TCWG and internal controls, whether they are working properly or not. And visits to the entity's premises and plant facilities, and tracing the transactions to the information system and ethical reporting. It is like audit trail. Sir, how do you understand the entity? Entity can be understood by industry and regulators. What are the factors they are affecting it? Sir, it is a banking industry. It is an insurance industry. It is an infrastructure company. It is some industry. Okay, try to get the knowledge of that industry first. Regulatory framework. What reporting has to be there? Then nature of entity. What nature of entity? Mainly, nature is kind of ownership. Nature is kind of operations. Nature is kind of governing structure. Who is managing that? Founder, promoters, CEO, CFO. Who is managing that? Depending on that, also you have to verify that, understand the entity. Then accounting policies. What accounting policies are there that is being implemented by the company? Are those accounting policies consistently applied from year on year? Are they suitable for this entity or not? That also has to be checked. Then financial reporting framework. What is financial reporting framework? What type of reporting framework they are applicable? Companies Act, na? Then check Schedule 3 is being followed or not. Is accounting standards followed or not? No, sir, that is insurance company. Okay, check IRD Act is being followed or not. All those things has to be checked. Financial reporting framework. Objectives, strategies, and business models. Objective, strategies, and business model. Okay, sir, what is the objective of the business? Sir, that is almost non-charitable purpose. That is non-charitable purpose. That is commercial. What is the business model? Sir, that is business model is B2B. Only business to business they do it. Sir, no, sir, business model is B2C. Business to consumers they are selling it. You have to check that. And measurement and review of financial performance, how they are performing from last quarter, that last year, every year you keep on continuing. So by doing all those things, you can understand the entity, whether entity is clear with respect to regulatory environment. Are they preparing financial statements as per the required law? Are they using applying accounting standards wherever that is being required? And are they what is this? What are the business models, accounting policies, etc., are there? Whatever I tell that understanding of an entity, the importance of understanding of an entity is not one time process. That is continuous process. That is not one time. So why we should understand the entity? Because the same thing, advantages of planning, program, all those things are there. No? That is being combined here. Why we should understand the entity? Because it helps the auditor in planning, audit, identifying areas of requiring special attention. Okay, sir, I should focus on this area. I can ignore the other areas. Gaining the knowledge about the client's business is one of the important principles in developing an overall audit plan. Okay, without understanding what we are doing, if you do it, then we call it as what? No, it is not an audit. It is just following the instructions of from some other party. Without adequate knowledge of the client's business, a proper audit is not possible. Because if you don't know which area that is being working, then how can you verify financial statements? Are they requiring insurance, banking, electricity, companies act, partnership? What type of financial statements are required? That is why you should understand the entity. Where the importance, significance means importance. Then understanding is a continuous process. That's okay. Then uses of understanding. Key judgments. What is the use of understanding? So you can assess the ROMM of the financial statements. So you can decide the materiality based on that as per 320. Consider the appropriateness and selection of application of accounting policies, whether they applied correctly or not. Then you can identify the areas that may need attention. Related parties, going concern assumptions. That means SA 550, SA 570, everything is being complied or not. Develop expectations for use and perform analytical procedures. And evaluating the sufficient and appropriateness of audit evidence that is being obtained. This is about SA 315. You can have a look into it. You read the exam key tips also once. So once you identify the risk under SA 315, I'll assess the risk. You should give the responses. When I say responses, it is not just somebody tells hi and you tells hello. That is not called as a response. Here I am telling, whenever you have a problem as an auditor, how do you are going to resolve that problems? That is called as auditor's response to the assessed risk. So is there any other risk? Yes, unassessed risk is there, which is not identified. For not identified risk, how can I find out some solutions? It is like, okay, ನಾನು ಮನಸ್ಸಿನಾಗ ಒಂದು ಕಲರ್ ಐತಿ ಹೇಳ್ರಿ ಯಾವ್ದಂತೇಳಿ. ನನ್ನ ಮನಸ್ಸಾಗ ಒಂದು ಕಲರ್ ಐತೆ ಯಾವ್ದು ಹೇಳ್ರಿ? ಐ ಹ್ಯಾವ್ ಒನ್ ಕಲರ್ ಇನ್ ಮೈ ಮೈಂಡ್. ವಿಚ್ ಕಲರ್ ಇಟ್ ಇಸ್? ವಿಚ್ ಕಲರ್? Blue color. Which color? No, first of all, I did not tell anything. If I tell that, see, there are red, green, blue, out of which there is one color in my heart or my mind, then you can easily find out. So out of which you can apply one or two or third attempt, then you can easily find out the answer. That is why you can identify only the responses. You can give responses only to the identified risk, assessed risk, not for the unassessed risk. So it is whatever it is identified in SA 315, that has to be response in 330. Sir, how can you respond in 330? Auditor's response to assessed risk. This deals mainly with auditor's responsibility to design and implement the responses to ROMM identified under 315. So what is the objective of 330? The objective of 330 is to obtain sufficient appropriate audit evidence about ROMM, risk of material misstatement, through designing and implementing appropriate responses to those risks. He has to design and implement with respect to those risks. What is the overall response? There are two types of responses. One is overall response, second one is responses at financial statements items. Wait, it is there here. Okay, we'll discuss. One is requirements of overall responses. What is overall response? The auditor shall design and implement overall responses to address the assessed risk of material misstatement at the financial statements level. Financial, because it is financial statements level, we call it as overall. Again, there comes the auditor shall also design and perform further audit procedures. See, here also it is same thing, whose nature, timing and extent are based on and are responsive to the assessed risk of material misstatement at what level? At assertion level. What is that assertion level? That means it is at a items of the financial statements level, maybe inventory, maybe PPE. Overall means entirely okay, balance sheet, cash flow, P&L, everything put together, we are tracking it as overall financial statements level. What is assertion level? Maybe only balance sheet, maybe only P&L, maybe out of balance sheet only assets, only liabilities, maybe out of assets only PPE, only inventory, only cash in hand, only investments. That's what we call as assertion level. Sir, how do you design the further audit procedures? The auditor shall consider the reasons for assessment given to risk of material misstatement at the assertion level for each class of transaction, account balance and disclosures. What is the reason why they have identified it as risk of material misstatement under assertion level? Based on that, you decide what procedures has to be performed. Obtain more persuasive audit evidence. The obtaining more persuasive audit evidence, the higher the audit assessment of risk. What do you mean by persuasive? Convincing. Convincing audit evidence. If you get some audit evidence which is not convincing to you, then don't accept that as audit evidence. The more convincing evidence you get, the more satisfaction you get, the more response you are trying to do that, depending on the auditor's assessment. Sir, how can I do that further audit procedure? There are two ways of doing that further audit procedures. You can do test of controls also. You can do substantive audit procedures. Sir, what is the test of controls? What is substantive audit procedures? Test of controls is nothing but testing the controls of the entity that is being implemented by with respect to financial statements, with respect to other in case of an entity. What is financial statements level? Sorry, what is this substantive audit procedures? That is consisting of two more points. One is test of details. Second one is test substantive analytical procedure. Sir. It is analytical procedures. Significant substantive analytical procedures. So what is this? What did I tell? First one is test of details. Not testing the controls. Once the entry is being made, how the entry is being passed from origin till its end. It is called as control. If you do that, we call it as test of control. Checking whether it is sending directly to the respective accounts, respective balances, respective transactions, respective accounting balances. No sir, that is being correctly, system is correctly working. Whether that is being posted correctly or not. Checking individual transactions and everything is called as test of details. Test of details. So substantive audit procedures is consisting of two things. One is substantive details. Second one is significant substantive analytical procedures. Test of details means checking the details which are entered through the controls. That is being substantive, test of details. The test of details can be done through two ways. Either you can do the verification or you can do the watching. When I say you can do the watching, you can do the watching for P&L items, income and expenditure items. Okay, sales happened, yes, you watch it. Again, purchase happened, again you watch it. Again, rent paid, watch it. Salary paid, watch it. That is called as watching. Sir, what is verification? Verification generally comes, okay, does this building belongs to you? Verify the title deeds, verify all those things. So, watching and verification. Watching is for generally income and expenditure or P&L items. Verification is mainly for balance sheet items, assets and liabilities. That is part of test of details. Then significant analytical procedures is same as per SA 520 only. Understand the relationship between financial as well as non-financial data. Then try to get the reasonable conclusions. That is what entirely being discussed in 330. So when to perform the test of controls? The auditor shall design and perform test of controls when the auditor expects that controls are operating effectively. Substantive procedures alone cannot provide sufficient and appropriate audit evidence at the assertion level. That's okay. How do you perform the test of controls? You can do like you remember the 7 elements: inquiry, inspection, out of which only few things are there. You do anything in audit, only 7 methods are there. A combination of inquiry, determination whether controls are based and dependent on other controls. The auditor shall test controls for particular time or throughout the period which auditor intends to rely upon those controls, etc., etc. What is prior audit evidences? Prior audit evidence is nothing but any evidence which is obtained in the prior period audits. Before beginning this audit, if you have any evidence, you consider that. Auditor plans to use audit evidence from previous audit about the operating effectiveness of specific controls by establishing continuing relevance of the evidence. Whether whatever evidence you obtained, is it effective or not? You check last year. Last year also obtained same evidences. Then you can use that. If not, no use of that. How do you do the evaluation of misstatements and deviations? The auditor shall evaluate whether misstatements detected by substantive procedures indicate the controls are not operating effectively or not, and if there are any deviations from controls are detected, the auditor shall make specific inquiries to understand these matters and inquiry their potential consequences. That's okay. Then comes test of details. That is, they're having two things. One is test of transactions, that is watching, and test of balances, that is verification. Test of transactions are like mainly for verifying transactions by examining the related documents, maybe purchase, maybe sales, etc., etc. Test of balances means verification of assets as well as liabilities. What is substantive analytical procedures? Analytical procedures means evaluating financial information through analysis of plausible relationship among both financial and non-financial data. Agreed. What you have to auditor's determination. Depending on the circumstances, the auditor may determine that performing only substantive analytical procedures will be sufficient to reduce the audit risk to an acceptable low level. If yes, do that. If not, don't do that. Only test of details are appropriate. No sir, only test of details are not appropriate. We have to do test of controls also. We have to do substantive analytical procedures also. Combination of substantive analytical procedures of test of details are most responsive to the assessed risk. You do all the procedures which are available, that will be better to the assessed risk in case of audit of financial statement. That is about 330. 330 is mainly talks about if the risk is already identified, and 315 try to what is this? Response to the assessed risk. So how do you respond? There are two ways of responding. One is test of control, second one is test of details. Test of control means check all the controls whether they are operating effectively or not, all those things. Test of details has again two things. One is, sorry, not test of details, significant audit procedures. Significant audit procedures has two things. One is test of details and significant analytical procedures. Whether test of details watch and verify in the test of details, and when it comes to significant analytical procedures, try to identify the financial as well as non-financial data and derive some relationship for that, and check at the end, is doing only test of control sufficient? Do that. After that, if fields or further audit procedures are required, okay, go and do significant audit procedures. In that significant audit procedures also, do we need to do only test of details, or is sufficient, or even test of details along with significant analytical procedures are required? Depending on that, you decide what procedures are required to respond to the assessed risk in case of this thing. That is 330. You can go through this exam tips also. So now we will begin with 510. So initial audit engagement opening balances. Sir, what is this initial audit engagement opening balances? Whenever the financial statements are, I am an auditor of the company with respect to any financial statements. that financial statements contain some items which are audited by somebody else in the last year or that are not audited, because of which I have a responsibility to make sure that whatever there in the last year which has come into the current year, they are correctly brought forward, because they audited, somebody else has audited or nobody else has audited, but now current this time I should make sure that if it is audited, they are correctly brought forward from the last year or current year. Because if it is not correctly brought forward, opening entirely gone. When the opening gone, then closing also gets affected. When the closing gets affected, then every financial statements items gets affected. That is why it is the responsibility of an auditor to know that every items of the last year closing has been correctly brought forward to the current year opening. That is what has to be seen. So that is being discussed here. So mainly this engagement opening balance mainly discusses either of the two situations. One is financial statements were not audited last year, or if it is audited by a predecessor auditor. Predecessor auditor means other auditor. Other auditor. Meaning of initial audit engagement, again same thing. Situation 1 and 2. It was not audited or audited by a predecessor auditor. What is objective of SF 510? Objective of SF 510 is with respect to opening balances to obtain sufficient and appropriate audit evidence whether any opening balance contains misstatements that materially affect the current period financial statements. Because the last year closing, current year opening, current year entirely being gone. If there is a misstatement, you have to understand that. And if there is any accounting policy which was there in the last year, whether they are consistently applied in the current period or not. If no, if there is any changes made, whether they are accounted and presented and disclosed as per AFRF or not, that has to be seen. First one is opening balance does not contain any material misstatement. Second one is whatever the accounting policies applied in the last year, that has been currently consistently applied in the thing. If there is any change in the accounting policies, that is properly being disclosed and accounted in the current year financial statements. Now, what is the procedure for opening balances as the auditor? You should first read the most recent financial statements and predecessor auditors report there, and if it is audited, because initial audit engagement has two things. One is not audited, one is audited by other auditor. So you should read most recent financial statements, maybe interim financial statements, maybe last year financial statements, and the predecessor auditor's report if it is audited. Try to obtain sufficient and appropriate audit evidence regarding what? Regarding that the prior period closing balance have been correctly brought forward to the opening balance. Last year closing equal to opening current year. If it is correctly there or not, you try to get sufficient and appropriate audit evidence. Confirm that whatever the policies they are applied in the last year, sorry, in the current year, they are matching with the opening balances and appropriate accounting policies of the last year also. Same consistent accounting policy. And as auditor performs specific audit procedures to obtain evidence directly on the opening balances. How do you obtain, sir? Okay, sir, they're telling 10 lakh rupees of inventory is opening there. Okay, go and verify the physical only. Try to get it done by physical register of the inventory. If the financial prior period audit report was modified, that means last year audit report, he did some audit was conducted, he felt okay 1 2 3 4 5 years mistake, you please correct it, gave qualified opinion and went away. Now whatever the matters which gave rise to that qualification, you evaluate the effect on the current period risk of material misstatement, whether that is corrected or not. If it is not corrected, what is the effect on the current year? Then now misstatement in opening balances. What is misstatement in opening balance? The auditor obtains audit evidence that opening balances contain misstatements that could materially affect the current period financial statements. The auditor shall perform at that situation, auditor shall perform such additional audit procedures as appropriate in the circumstances to determine the effect on the current period financial statements. Whatever you feel necessary to determine that everything is not free from material misstatement, do that. If the auditor concludes that such misstatements exist in the current period financial statements also, whatever is there in the last year still continue to be there in the current year, then auditor shall communicate the misstatements with the appropriate level of management and TCWG. See, sir, it is not right. Whatever it was there last year, it is still continuing. You please correct it. If they are corrected, do some audit procedure, then continue. If not, modify the opinion, go for 705. That is what you have. What procedures has to be adapted to obtain audit evidence? Mainly inventory. try to observe the current physical count and reconcile it to the opening quantities. That means current year closing inventory verification event as per 501 physical inventory verification. At that time you found out some inventory, maybe some 1000 units. Current year purchase and sales will be there. You do the reverse calculation and try to come back to the opening balance. Whether that is matching or not, you would do it with respect to inventory. Again, performing audit procedures on the valuation of opening inventory items. Whether in the opening inventory is correctly valued or not, cost or NRV, whichever is lower, because that has to be done by class basis, item by item. Fixed asset is separate item, WIP separate item, separate class. Again, inventory, raw materials is separate group. That has to be done for everything. Then performing audit procedures on the gross profit as well as cutoff, because gross profit is mainly dependent on closing inventory and opening inventory. Higher the closing inventory, higher the gross profit, lesser the closing inventory, lesser the gross profit. Once the inventory is being touched, gross profit also has to be touched continuously. Then with respect to non-current assets and liabilities, try to verify what is this, accounting records and other information underlying the opening balances. And if you want, you can get the confirmation from third parties also. How do you report it? As per 510, if the auditor is unable to obtain sufficient and appropriate audit evidence or concludes that the opening balance contain a misstatement materially affect the current period financial statements, then he is unable to obtain sufficient and appropriate audit balances, then go for 705 as qualified opinion. He concludes, that means he obtained and concludes opening balance contain a material misstatement that affect current period financial statements, adverse opinion. Sir, why can't they go for qualified opinion? Huh? Where did they tell there? Because they use the word financial statements. At the financial statements level is different, assertion level is different. You remember that financial statements is always pervasive. Just now we discussed in audit risk, financial statements level, assertion level. Assertion means any item of the financial statements. Financial statements means always possessive. If the prior period audit was not modified, evaluate carry forward effect on the current period risk of material misstatement. Consider modification in the current opinion if the ROMM is significant. That is done by 315. If still continues, go for 705. This is for 510. We'll continue discussion. Essay 520, analytical procedure. Sir, what is this analytical procedure? Any procedures which is performed by the auditor by linking the financial as well as non-financial information so that he can get some reasonable conclusions on the financial statement, so that he can express an opinion, is called as analytical procedures. If you go by the technical definition, they tell that analytical procedures are means you are evaluating the financial information through the analysis of plausible relationships of the financial as well as non-financial information of an entity, is called as analytical procedures. So why that is important? See, whatever we are discussing from essay 200 to essay 710 till now, these are one of the method there for the purpose of getting the evidence. You can do 500, 501, 505. You do something but get the evidence reasonably reasonably conclude that everything is free from MMS and give the opinion. That is what is there. So AP, analytical procedures, means evaluation of financial information through analysis of plausible relationship among both financial as well as non-financial data, and if you find out any fluctuations, investigation of those fluctuations are being taken. Inconsistent relationships are amounts that differ from expected value by a significant amount. So meaning of analytical procedures, that now we discussed. First, you should try to find out the relationship between financial and non-financial and do that. And if there is any fluctuations or differentiation, try to investigate that. What is the objective of 520? You are trying to obtain relevant and reliable audit evidence. See, everywhere you want to get the evidence. You do one or the other way, 10 ways, 100 ways, you should get the evidence. When using the substantive analytical procedures. To design and perform analytical procedures near to the end of audit that assist the auditor when forming an overall conclusion as to whether financial statements are consistent with the auditor understanding the entity. It's simply they're trying to tell that, see, analytical procedures need not be always at the audit report date. You should do it throughout the audit, but you should do one last audit analytical procedures at the audit report date, so that if there is any misstatements were there earlier, that can be easily found out. If you are giving audit report on June 10th and you are doing On May 10th, analytical procedure that will ignore the transactions or any verifications done from May 11th to June 9th. That is why try to do it at the near to balance audit report date, not balance sheet date. When should you do the analytical procedures? Auditor should perform analytical procedures at the risk assessment procedure. What is risk assessment procedure? Test of controls, test of details, those things. And AP are required in a testing phase also. And 500 tells that auditor to use analytical procedures at the completion stage when forming an overall conclusion. See, at what stage? At completion stage. Conclusion as to whether the financial statements are consistent with the auditor's understanding of the entity or not. Auditor has understood entity in such some way, whether whatever the entity is understanding about the auditor's understanding about the entity is there, is it right or not right? That has to be taken care. In planning stage, how do you use analytical procedures? It will assist in identifying the aspects of entity which your auditor was unaware. If you do this analytical procedures, it will give some idea. Okay, you should focus on this while you are working. You should not focus on these areas. It will even assist in assessing the risk of material misstatement. That means ACPD difference category comes here. It will even assist in identification of unusual transactions like anomaly transactions or events, as well as amounts, ratios, trends that could potentially impact an audit. Actually, every ratio has certain importance in case of financial statements. Every ratio should not be more than certain level. So this analytical procedures try to give that, okay, relationship is there, what is the adverse ratio, what is the favorable ratio, and it will identify ROMM due to fraud. If you look at the thing, see, ROMM can happen due to fraud or fraud maybe because of error also. They are not covering error here because error can be corrected, but frauds are not easily identifiable, not easily correctable also. Whenever you want to apply the analytical procedures, what factors you should consider? The factors you should consider is SADPIN, that mnemonics has been added. One is the source. Reliability of the data depends on source. Non-routine and estimation class of transactions are more difficult to predict. That means, see, if it is routine transactions, anyway it is visible in this month also, next month, every month it is visible, so that you can easily find it out. If there is one transaction which is hiding between some 1 lakh transactions, it is very difficult to find out significant class of transactions. So availability of data is also important. If the available data is reliable and relevant, that will facilitate the effective procedures. If that is not relevant or not reliable, what is not relevant? Whatever I am verifying, the data belongs to something else. What is not reliable? They might be fake, they might be made by the company. That is what it is there. So what account type? Income statement accounts tend to be more predictable as reflect accumulated transactions over a period. Balance sheet amounts represent a net effect at point of time. See, whenever I say income statement item, it may be income and expenditure or P&L item. So it can be predicted over a period of time. Okay, if you take 5 years back, 4 years back, 3 years back, there is a trend which is going on, and based on that trend, you should analyze. Okay, this much can be there in the current year. And when you take that, it is belonging to a period of time. What do you mean by a period of time? Okay, 1st April to 31st March, that is what a period. But if you look at the balance sheet date, that is at a point of time, as of today, maybe 10 years back, maybe 20 years back, I don't care. As of today, that is the value of this thing. And disaggregation, what is disaggregation? If you give entirely in a combined manner and mix and match manner, that is very difficult to do that analytical procedures. If you give everything in a disaggregated manner, that is okay. 1,000 rupees transaction, 10,000 transaction, 1 lakh transaction, sales transaction, purchase transaction, rent, salary. Disaggregation means separate transactions. Then auditor can easily identify and apply that analytical procedures. But if you mix and match everything, then it is very difficult. I think I have given an example of Subrata Roy. You remember that he sent around 140 trucks to income tax. In regular class we discussed in aggregated manner, so that the income tax only left speechless. 140 trucks containing many not drink. The degree of disaggregation is available in available data can directly help in detecting the misstatements. Predictability. Substantive analytical procedures are more appropriate when an account balance or relationships between items are predictable. That means, okay, if this is affecting this much, if the sales is affecting 10%, profit also gets affected by 5%. If it is predictable over a period of time, then you can do it and apply analytical procedures for financial as well as non-financial data correctly. But on some time 10% sales affected, 30% profit affected, 10% sales affected, only 5% profit affected, sometimes 10%, 100% profit affected, sorry, sales affected, only 0% profit affected. That means there is so much of fluctuation that you can't apply that analytical procedures. And inherent risk also there, always in every way the inherent risk is there which can't be reduced. And nature of assertion, more effective in providing evidence for some assertions than others. Data analytics can be used to address completeness, valuation, measurement and occurrence. We will discuss this in financial statements item, last chapter, which is going to be discussed. Types of analytical procedures. So there are 4 types. This is important from examination angle, 4 marks. Types of analytical procedures. There are 4 methods. One is trend analysis, second one is ratio analysis, third one is reasonableness test, fourth one is structural modeling. Sir, what is this trend analysis? Trend analysis means, see, you don't just see the current year data, you compare some previous year data. Okay, 23 happened, 24 happened, 25 happened, 26 is there now. Okay, what can be there for 27? So trend, this is how it is going, 10% is going, current year also it might go 10%. That is how we try to identify analytical process. That is called as trend analysis. That is, we are using the prior period data, we will try to predict the current period or future period data. That is trend. Second one is ratio analysis. What is ratio analysis? We are not comparing past year data and present year data. We are comparing 2 items of the financial statements of current year only. For example, if I tell that the debt equity ratio, what is the current year debt, what is the current year equity? So 10 lakh is the debt, 5 lakh is the equity. That means debt equity ratio is 2:1. So 10 lakh is the debt, only 2 lakh is capital. That means 5:1. That is totally wrong. That should not be. The 2:1 is the ideal item, ideal ratio. That is why analyzing the one item of financial statements with another item of the current period financial statements itself is called as ratio analysis. But that has to be connected items. For example, if I tell profit ratio, what is this? PSR, profit sharing, not profit sharing ratio. What is it? Earnings ratio. Earnings divided by sales. We do it, or debt equity ratio, or maybe current ratio, or maybe liquid ratio. Any ratio that can be done. Then comes reasonableness test. What is reasonableness test? Reasonableness test consists of not just the financial items, not even the previous year items, current year financial as well as some non-financial items they consider, and they try to find out that thing. For example, employee, number of employees and salary per employee. You remember that example? 100 employees, 10 lakh. This employees, how much is salary? That's what we got as reasonableness test. Structural modeling means there are some tools like statistical tools or those other things that can be used by the company, auditor, for the purpose of doing that. So comparing current data with prior period data is called as trend analysis. By analyzing the asset and liability accounts as well as revenue and expenditure account, it can be compared over time or to the ratios separate entities within the group. You can compare, you can check that, okay, what is the debt equity ratio of subsidiary company, what is the debt equity ratio of my company. So within the group or anywhere you can compare. And reasonableness test does not rely on the events of prior period but relies upon non-financial data of the audit period under consideration. What is non-financial data? Number of employees, number of computers are there, everything which is other than money is also being considered here. Then structural modeling means a tool constructs a statistical model from financial or non-financial data in of prior accounting periods to predict current accounting balances. We also don't know what is the structural modeling. There are some what is this? Maybe Modigliani-Miller model, if you have seen in FM, or maybe one more model is also there. What is it? MM is Modigliani-Miller. Then, people are writing FM examination in this May. Okay, some models are there, tools are there which will be used. No, there is one more author, financial management, financialist. So analytical, see, when I studied for my CA intermediate FM, I remembered still now that one Modigliani model, Modigliani-Miller model. You people are recently completed the class and revising on a continuous basis and not able to remember it yet. No. Analytical procedures as a substantive test. How can you do that? First of all, you should determine the suitability of particular substantive analytical procedures for given assertions, taking account of the assessed risk of material misstatement. Assess the reliability of the data from which the expectations of recorded amounts or ratio is developed. Okay, whatever you develop a ratio, for example, debt equity ratio, is that money or amount is reliable or not? Based on that also you decide. Determine an expectations of recorded amounts or ratios and determine the amount of difference between, that's okay. Go to that substance suitability of particular analytical procedures in given assertions. Okay, this is, I'll discuss this thing. So the extent of reliance on reliability of data. To what extent you can rely on the data is dependent on certain factors. Should I trust the data? Should not trust the data? Depends on what factor. What is the source of information? If the information is external source is more reliable than the internal source. So if the information whatever I get data from external party, then I feel okay, it is right more compared to the internal data. Then comparability of the information. What is comparability of the information? Whatever the data I am asking, sir, give me 24, 25, 25, 26, so that I can compare. But they are giving 22, 23 and 25, 26. So much of gap is there that can't be compared. Comparability of information also. And the nature and relevance of information. What is nature and relevance of information? Is it relevant for the current period audit or not? And controls over which preparation of the financial information. Then investigation results of analytical procedures. Okay, these things are okay. You should remember analytical procedures types, techniques, as well as the factors which are affected for considering the analytical procedures and timing of this analytical procedures. Some 2-3 questions are possibility is there in this. So key exam ticks. Go through this. Now we will begin with 530. Let's say 530. Audit sampling. Sir, what is this sampling? As we know in the beginning of the chapter, first chapter, the NOS audit, one of the inherent limitations of the audit is that the audit procedures he performs, because of the timeliness and the cost involved in the verifying all the resources, the auditor will always go for sampling method. What is sampling? Selection of some items for which is less than 100% of the population, for which some audit procedures are being applied. After that audit procedures are being applied, whatever the results we get it for that sampling units, that sampling units will be extrapolated to the entire thing, and we try to give it for reasonable assurance on the financial statements whether they are free from material misstatement or not. Sir, why don't we give the absolute assurance? Because of this point only, because we are not what is this? So verifying all the 100% of the items, we are always going for sampling method. Sir, what type of samplings are there? There are mainly two types of sampling. One is statistical sampling, second one is non-statistical sampling. Sir, what is statistical sampling? Something by which you apply some methods which are proven in statistics category of thing. That is called as statistical sampling, like simple, random, systematic sampling, haphazard, monetary unit, block sampling, etc., etc. But what is statistical sampling? Non-statistical sampling is like just applying the way your heart and mind says. You just go by that flow. There is no need for any systematic method to be applied. So this 530 audit sampling, less than 100% of the population, each unit has equal chance of being selected, and conclusions on populations based on conclusions on sample. That means whatever the conclusion you get on the sample, the same conclusions will be extrapolated. If 10 mistakes is there for 100 units, then what is for 1000? That is 100 mistakes. So 10% of that thing. There are two stages. One is we should study and evaluate clients' internal controls and conducting the substantive procedures. So closely similar to whole population, although not necessarily exactly the same. That means all the population, whatever you select, that should be closely similar. Need not be 100% same. Something may be 100 rupees, something may be 90 rupees, something may be 110 rupees. That is similar, but need not be everything is 100. And sampling unit means individual items that make up to a population. Single items, you put it together, we call it as population. What is the 530 objective? To provide a reasonable basis for the auditor to draw the conclusions about the population from which the sample is being selected. And entire set of data from which sample is selected and about which the auditor wishes to draw the conclusions is called as population. So there are some characteristics of the population. What should be the characteristics of the population? The population should be appropriate. What do you mean by appropriate? If you are verifying the purchase data, purchase population, then the characteristic should be that all the items should be related to purchase. You can't give some electricity bill to verify purchase data. That should be appropriate. Appropriate means selecting the right data to verify the right things. Then comes completeness. What is completeness? All the transactions which has happened in the current year should be, all those things has been there. It is not, nothing is missing, nothing is extra added regarding the last year or next year. And reliable, whatever the things are there, they are reliable. That should not be fake, or they should not be made up by the company. All those things. These are some characteristics of the population. There are two types of sampling method. One is statistical sampling. Second one is non-statistical sampling. Statistical sampling, again there are some theories category of thing, like random sampling uses the probability theory, measurement of sampling risk, and more scientific method is called a sampling method. See, they might ask what are the advantages of sampling method. You have to write that it will use the probability theory, sampling risk will be measured, again more scientific. In material also, regular material such it is there, but it is in a different format. And non-statistical means sample size per personal experiences. As per personal experience, okay, I feel okay the 31st March is very riskier, so you open that thing. That is called as non-sampling statistical sampling. That is a traditional approach, neither the objective nor scientific. It is less time consuming because you don't need to apply any formula or anything to segregate, sort, filter. Nothing is to be done in case of non-statistical sampling. Some advantages are also there, disadvantages are also there. You read that. I am not discussing that. Then there is a risk called as sampling risk as well as non-sampling risk. Sir, what is sampling risk? I think we discussed in the audit risk concept. Under detection risk, there are two types of risk. One is sampling, second one is non-sampling. What is sampling risk? Whenever you are verifying some population and you selected the wrong samples to verify that population, it's called a sampling risk. You selected the wrong sample, deriving the conclusions on other population. That is called a sampling risk. What is non-sampling risk? You selected the right sample but apply the wrong procedures, wrong methodology, wrong tools, wrong type of things is being applied. That is what we call it as non-sampling risk. So, first one is sampling risk. What the auditor's conclusions based on sample may differ if audit procedures are applied to the entire population. That means whatever the conclusion you reached by using some samples, if you apply the same procedures or same tools, the entire population opinion would be totally different. Here you got the unmodified opinion, there you will get the modified opinion in that category. There are some errors. One is test of controls appear more effective. There are two types of errors. One is effectiveness, second one is efficiency. Some controls appear to be more effective. Test of details. Test of controls appear to be more effective. Test of details. Misstatement does not exist when it in fact it does. Inappropriate audit opinions. The first one is you are thinking no misstatement is there based on your sampling. For example, there were totally 100 invoices. Out of it, you selected 10% as sample. That means 10 units you verified. Out of 10 units, you identified 0 mistakes. That means you are trying to tell based on the controls and test of details, there are no mistakes when the remaining when there are mistakes in 90 units. In that case, the moment you identify no mistakes, you try to go for unmodified opinion. That is totally wrong. That is what one error. Second one is other thing. You verified same 10 things. Out of 10, all the 10s are mistake. Then you started concluding that if 10 is for 10, then 100 is for 100. Then you expressed a disclaimer of opinion, something or adverse opinion. That is totally wrong. The remaining 90 may be totally correct. So when there are misstatements, you are thinking that there are no misstatements, or when there are no misstatements, you are considering it as misstatements. Then comes non-sampling risk, reaching an erroneous conclusions for any reason not related to the sampling part. Sir, how much extent I should check? 10% or 20% or 30%? It is not a standardized procedure. It is depending on certain so many factors. Maybe size of the organization under the audit. If the audit is to like DMart, lines, all those things are there. Too many transactions have to be checked. State of the internal controls. If the internal controls are working effectively, you check lesser items. If the internal controls are working not effectively, you have to check more things. Adequacy and reliability of books and records. Tolerable error range. What is adequacy and reliability of 1 second. Adequacy and reliability of the books and records. Whatever the books and records that is being prepared by the company, can you rely on that? Are they adequate for the purpose of current audit? And degree of desired confidence. If you want more confidence, 70, 80, 90% confidence, you have to verify more items. If your confidence is okay, 60, 70% is also okay, okay, lesser items are taken. Sampling, how much sample has to be taken depending on the desired confidence. Sir, how do you select the items for sampling? You should select items for sampling such a way that every item has an equal chance of being selection. How, if you take the statistical sampling, that is based on some probability theories. If you go for non-statistical sampling, that is judgment based. What is the purpose of sampling? To draw the reliable conclusions about the entire population because of time constraints. Because of time constraint. If there is a time available, then I would have verified 100%. Then comes stratification. There are three words. One is population, then stratification, strata. What is stratification? Stratification means it is a process. It is a process. For example, I made 100 groups, 100 units, one group is called as stratum, under which I selected one item, that is strata. So the way of dividing the groups is called as stratification. Stratification is a process. So population divided into strata. Strata is a group having identifying characteristics. Objective is to reduce the variability of items. What is variability of items? There are transactions which are starting from 10 rupees till 1 crore rupees. The moment there are so many population, you try to divide it by, okay, 10 to 1000 rupees one category, 1000 to 10,000 one category, 10,000 to 1 lakh one category, 1 lakh to 10 lakh one category, 10 lakh to 1 crore one category. That means you divided the population into strata. Out of that strata, you started selecting one item, say 10%, 20%, 30% is called as stratum. Selected items of stratum, the process of selection is called as stratification. So often stratified by monetary value. Generally, you go by value only. It is not by date wise or something wise. Higher the values, you put it one category. Lower the values, you put it under one category because of the materiality concept. Great audit efforts for larger value items are required compared to the less value items. With the class of transactions or account balances divided into strata, misstatement projected equally separately. Okay, that's okay. Then sample design. How you should design your sample? The purpose of audit procedures and characteristics of population from which sample will be drawn. The nature of audit evidence sought and possible deviations or misstatements, conditions. That's okay. Not important terms you go through. Tolerable misstatement, tolerable rate of deviation, tolerable error. Methods of sampling is important. Simple random sampling. What is simple random sampling? Okay, we don't apply any methods. You tell that, okay, you select, okay, this is some simple random. Equal chance or random number generators, simple or unbiased. Sir, then what is the difference between simple random and non-statistical sampling? Non-statistical is like I am selecting, okay, you come, will go out. What is simple random sampling? I'll put the chits and I'll pick some 10 people. That means my biasness is not there. It's called a simple random. If my biasness is there, that is non-statistical sampling. Then stratified sampling. What is stratified sampling? That means you divide it into different groups, and every group, okay, 5th item, 10th item, 20th item, that we will be selecting. Then interval or systematic. This is what interval or systematic. Total population divided by sample size you want to select, and you select 10%, 20% from that. So it is like interval sampling is like, okay, everybody stand in queue. Okay, you come, next fifth person, next fifth person, next fifth person. There is an interval. Idike gap estide andre there is an interval. Exact interval is there. Then monetary unit. What is monetary unit? We'll put it for based on the amount which is being there. 10 up to 10 lakh one category, more than 10 lakh one category, up to more than 1 crore one category. So higher the value, I select more samples. Lesser the value, I select lesser samples. Lesser the value, I select lesser samples. Based on that, if you divide the entire population based on the monetary value, that is called as monetary value sampling. Then block sampling. What is block sampling? See, it is okay. Haphazard is like no structured technique. Avoid conscious bias. That means you should purposefully should not pick anybody. That is called as haphazard. What is block sampling? See, stratified and block sampling. You see here. 1 1 1 1. Now if you see here, first one is stratified random. What is stratified random? For example, you divide entire groups into same items, homogeneous items, and you select first item, maybe some fifth item, maybe some 10th item. Out of that one you'll get. Again here also first, fifth and 10th item. That is called as stratified sampling, stratified random. What is this block sampling? You will divide the samples into 1 2 3 4 5 6 7 8, 1 2 3 4 5 6 7 8. In this you select, see here blocks are homogeneous. Sorry, blocks are heterogeneous. This block is different, this block is different, but within the block everything is homogeneous. Here blocks are homogeneous in case of this thing, 1 2 3 4 5 6 7 8. Here also 1 2 3 4 5 6 7 8, but items within the blocks are heterogeneous. That is the main difference between those two things. You should, once you do the sampling, you should try to evaluate the results. If that is provided reasonable bias for conclusions about the population, then go for expression of opinion. If there is any deviations or misstatements, then evaluate possible effect on the audit procedures and other areas. Then there is something called as anomaly mistake. What is anomaly mistake? There are two words. One is anomaly, second one is non-anomaly. See, I am verifying something. In one invoice, out of 1000 invoice, in one invoice, instead of 5000, they entered it as 50,000 by mistakenly. Recently, I also did a mistake. I was incorporating an LLP. Every partner's contribution is 50,000. Four partners were there. 2 lakh rupees has to happen. I put it like 50, comma 1, 2, 3, 4 by mistakenly. It is not 50,000. It is 5 lakh, and we filed already. Later we realized, and we rectified that. So I thought, see, at that time it happens. I just copy paste, copy paste, copy paste. I did it. Why should I think? In first time it happened, then copy paste, copy paste, copy paste. Later we put some whitener, something we did and corrected it at later point of time. Now, just because I did this mistake in this LLP incorporation, do you think the same mistake is going to be repeated in every LLP incorporation? No, it's called as anomaly mistake. Anomaly means non-repetitive mistake. When this happens now, for example, you are verifying 10 in LLP incorporations, out of which one LLP incorporation this happened. Now you don't consider that, okay, this is there, every LLP will also have same mistakes, because it is out of things happen. What is non-anomaly mistake? Repetitive mistakes is called as non-anomaly. If there are repetitive mistakes, take it for extrapolation or interpolation. If it is not, then don't take it for extrapolation or interpolation, keep it as exceptional item. Then projecting the misstatements. What is projecting the misstatements? If 10 mistakes per 100 units, then what is for 1000 units is called as projecting the misstatements. Extrapolation is projection. But while you are projecting these misstatements, anomaly mistakes has to be avoided. You should not consider the non-repetitive mistakes. If it is repetitive continuously, you can consider that. So anomaly may be excluded from the projection. However, non-anomaly projections are still considered. That's it for 530. SA 530. Audit sampling. Understood? So now we will begin with 550. 550 is related parties, disclosures. See, this essay is not talking about whether company should have related party transactions or not. This essay 550 is talking about if you have the related party transactions, please disclose it. For that, first of all, we should understand what is related party, relationship and related party transaction. So 550 deals with auditor's responsibility regarding related party relationships and transactions when performing an audit of financial statements. Related party means as defined under AFRF. That is, what is AFRF here? AS 18, Accounting Standard 18. Or where AFRF establishes a minimal or no related party requirements. Then what is related party? Then a person or entity that has control or significant influence directly or indirectly through one or more intermediaries over the reporting entity. That means control or significant influence is also called as related party relationship. Another entity over which reporting entity has control. For example, if A is having 60% in B or 30% in B, both are okay, control or significant influence. Now A is the related party. Again, the party who is being controlled is also called as related party. B is also related party. Another entity is also related party. Then common control. What is this common control? A is there holding 60% in B. Again, 70% in C. Now A and B related, A and C is also related. Now in this point, B and C is also related because they are under the common control of entity. And government entities, this is an MCQ point. Just because government entity more than 50% of the share capital is held by, more than 15% is held by what is that, central or state government, they don't become related party transactions because that is just an type of entity is being there. Unless until they are sharing the resources or transactions significantly. This is the general things. What is the nature of related party transactions? Generally, people think that whenever there is a related party transaction, there could be some material misstatement. The price would not be the normal price. They might have given free of cost. They might have charged lesser price. They might have made some extra benefits for the other party. That is why many related party transactions are in normal course of business. I agree, but may carry no higher risk of material misstatement than similar transactions with unrelated party. That means whatever you consider she is my relative, you are not my relative. Whatever I deal with you, the same way I will deal with her also. Then it might not carry any related party risk of material misstatement. But if I am dealing with you in such a way, but it is exactly different in when I am dealing with the other party, then it creates some misstatements. The nature of related party relationships and transactions may, in some circumstances, give rise to ROMM. Then transactions with unrelated party. Transactions with unrelated party is better or not riskier compared to the transaction with the related parties. Higher risk of material misstatement. Sir, how do you understand the related party relationship as well as transaction? You first of all talk to the management. Sir, did you identify all the related party relationships? Yes. What is the procedure method you have applied for the purpose of identifying the related party relationship? You should ask to the management. So, auditor shall inquire the management regarding the identity of entities related parties, including changes from prior period. Okay. Last year, who was your related party? Did you last year you were holding 60% in some company, they are related party. Now you sold it 20%. That means they are not related party as per control, but they comes under the related party of significance. Is there any change from the last year to current year? Then again, nature of a relationship between the entity and these related parties, for example, control, influence, key manager, personnel, director, and whether entity has entered into any transactions with these related parties during the period, and if so, yes, then the type and purpose of the transaction. Did you do any transaction buying, selling, transfer of resources with the related party? If no, if yes, then what type of related party? What is the value? Then, whenever there are some related party transactions and relationships, there should be some controls implemented on that, so that unnecessary misuse of that related party relationship will not be done. So, identify, accounts for and disclose related party relationships and transactions in accordance with AFRF. The entity has to do that. Authorize and approve significant transactions and arrangements with related parties. The auditor shall obtain understanding of these things. Authorize and approve significant transactions and arrangements outside the normal course of business. If there are any this type of transactions, you should try to obtain the understanding of those entities, those type of relationships. Then whatever you see, just document it. What you have to document? Verify existence of related party relationships, mainly checking the details of income tax return. Shareholders register, principal shareholder. Principal shareholder means the largest shareholder. Information supplied by the entity to regulatory authorities. They filed in MC ROC. That's our ABC is my relative, BC Z is my relative something. Or you can check the internal audit report also. Statement of conflict from management and TCWG. Contracts not ordinary course of business, records of entities investment and those of its pension plans, etc. You just document all the things by verifying related party transactions, existence of related party transactions. This is 550. Very simple standard, small standard. Very rare chances of being asked in the examination. Just focus on the concept once while reading. If there are any questions in the RTP MTP, then do that. Now we'll begin with 580 written representations. What is written representation? These are some confirmations given by the management or TCWG to confirm certain matters or to tell some matters which are not available in the financial statements. Sir, why these written representations are given? Sometimes auditor does not believe evidence which is being given by the management or does not believe in the statement that is being by the management. That is why auditor try to ask, okay sir, whatever you tell, now please give it in the writing format, so I can take care of it. So that is what we call it as written representations. Any statement, written statement provided by management to the auditor to confirm certain matters or to support other audit evidences. Does not include the financial statements, assertions therein, or supporting books and records. See, if they give the P&L balance sheet, that is not written representation. Written representation is something which is given in addition to those things. Financial statements is not written representation, assertions are not written representation, books and records are also not written representation. To confirm those things, you give something that is written representation. So written representation as necessary evidence. So written representation is necessary audit evidence. If the auditor has obtained WR about specific assertions during the audit, it may be necessary to request an updated written representation. Sir, about what the written representation has to be given. The first written representation that they have to give is about the management responsibility. They have taken the responsibility for preparation and presentation of financial statements. They considered all the accounting standards, regulatory requirements, legal requirements, Schedule 3, all those things have been complied. And TCWG has taken oversight or responsibility for those prepared financial statements that has to be given. So management may include include qualifying language, stating the WR is the best of its knowledge and belief. Auditor may accept this if satisfied that WR is made by those appropriate responsibility and knowledge. He can accept, if not, he can reject it. Now, WR shall confirm management has provided the auditor with all information and access as agreed in terms of the engagement. They have to give this, and all transactions have been recorded and are reflected in the financial statements. That means completeness has been there, completeness assertion has been there, no transaction has been left out in the current financial statements. Again, why it is necessary? Because to avoid the future confusions, so that to make that who is responsible to tell to the public, evidence obtained during the audit is not sufficient without confirmation from management, because the auditor is not able to judge solely on the evidence whether management has fulfilled the responsibility or not. When auditor may ask the management to reconfirm the responsibilities, when he can ask the written representation one more time, when the terms are prepared in the last year, and maybe if you remember SA 210, in case of recurring audits, there are certain situations where you have to enter into new terms of engagement. Senior management has changed, again ownership has been changed, structure, complexity. In those cases, if it is prepared in the previous year, or change in circumstances. What is change in circumstances? Whatever they agreed originally, that was changed. They agreed for only one branch, now it is changed to 5 branches. Or Signatory is no longer responsible. The management, whoever signed that agreement letter or written representation or left the company, no longer responsible. Because of which, who are the new parties, you should take the confirmation with the new parties. Or the management or TCW has misunderstood some things. In that case also, better to go for one more written representation. And when should you take the written representation? What should be the form, period, date, and description? Written representation should be always uh, what is this, addressed to the auditor to confirm certain matters, and it should be dated as nearly as practicable to the balance sheet date, not balance sheet, audit report date, and it should be covering the entire period which is covered in the audit. If the audit is covering 1st April to 31st March of some year, then written representation also has to be given for that entire period. And what is the form? Form is exactly not given. You can give it in what is the form. It should be in the same manner as the terms of audit engagement, that means should be addressed to the auditor. Date of written representation as nearly as practicable to, but not after auditor's report date. The report cannot be dated before the date of written representation. The auditor is concerned with the events up to the date of audit report. Because if you date audit report now and take a written representation later, written representation is one of the evidence. Without evidence you are giving the report, that is totally wrong. Because you should come to a reasonable conclusion. How do you come to it? By understanding the sufficient and appropriateness of the evidence. Then period covered. Written representation shall cover all the financial statements period. That is 142 31.3, as management needs to reaffirm that written representation is made remain appropriate. When the current management is not present during all the period, this does not diminish the responsibility for financial statements as a whole. Requirement still applies. It means, sir, I joined only in the October. April, May, June, July, September, 6 months I was not there. Then the management cannot tell that no sir, I'll give written representation only for 6 months. I don't care. Give me WR for all the entire year. Whether you are there or whether you are absent, I don't care. I want the written representation for these things. And form of the written representation, it should be in the letter addressed to the auditor, and it should be management should make written public statement, and other auditor determines such statement changes, provides WR, etc. etc. It is simply like it should be addressed to the auditor, and it should be in a written format. And whenever you are obtaining the written representation, that there is a reliability or this a doubt as with respect to reliability, you can't write written representation not provided only. In that case, written representation is inconsistent with other evidence. Attempt to resolve the matter. If unresolved, reconsider assumptions, assessment of completeness, integrity, ethical, etc. etc. If not, generally go for 705. Auditor concludes the WR is not reliable, then disclaimer of issuing an appropriate actions, issuing an disclaimer of opinion. If written representation is also not provided, again discuss with the management, ask that give the written representation. If they are not giving, reevaluate the integrity of the management and take appropriate actions, including the requirements of disclaimer of opinion. This is also 705. Whatever you do, first try to get it in a normal talking terms. If that is not going to happen, go for 705 ultimately. That is what 580 written representations. Understood? Please go through this. So now we will begin with 600. Using the work of another auditor. Sir, what do you mean by using the work of another auditor? There was one more essay, that is essay 299. That is also we discussed. So, joint audit of financial statements. The difference between joint audit of financial statements and this 600, 299, 600 is 299 is talking about the same financial statements is being audited by multiple auditors, joint auditors. But here in 600 is talking about the financial statements of branch is audited by somebody else, subsidiary is audited by somebody else, head office is audited by somebody else. That is what we are talking. Using the work of another auditor. So it applies when the accounts of the branch or component are audited by a person other than the company's auditor. Other than the company's auditor means there are two types of auditor. Company auditor is called as principal auditor. Then the branch is called as other auditor. The branch auditor is called as other auditors. What is branch audit? When the accounts of the branch are audited by a person other than the company's auditor, that is principal. There need a clear understanding of the roles of such auditor, other auditors, and the company's auditor in relation to the audit of accounts of such branch and audit of company as a whole. There is a significant necessity for a proper rapport. Rapport means coordination between these two auditors for the purpose of completion of an effective audit. And the principal auditor, if he feels necessary, he has a right to visit every branch, even though the audit is being done by some other auditor. So, a right on the principal auditor to visit any component and examine the books of accounts and other records of said components if he thinks it necessary to do so. And when the work is done by the other auditor, then the principal auditor cannot question are you a competent person, all those things you can't do it, because the moment he is an auditor, he is a CA plus holding COP, he is already maybe equipped with all that specialized technical knowledge. That is why he is being appointed. You can't question his ethical requirements. You can question the ethical requirements, but you can't question the integrity, objectivity of that person. The person who is appointed for the component, the principal auditor would normally be entitled to rely upon the work of such auditor unless there are some special circumstances to make it essential for him to visit the component and examine the books of accounts or records. What procedures has to be performed by principal auditor? Principal auditor has to advise the other auditor, branch auditor, as well as coordinate with him with respect to collection of audit evidence. Advise the other auditor of the use that is being to be made of the other auditor's work and report to make sufficient arrangements for the coordination between their efforts planning stage at the audit. The principal auditor would inform the auditor that matter such requires special consideration. The principal auditor can tell that okay, go and verify only this item mainly important. The other items are okay, I don't have any problem. You can go with that. Mainly like inter-component transactions, etc., etc. And significant requirements. The principal auditor should advise the other auditor of the significant accounting, auditing, and reporting requirements and obtain a representation as to compliance with them. You have to tell them, sir, you should comply with MCA, ROC, GST, income tax, everything you have to do it. And at the end, you take a written representation stating that yes, you complete or not, give me a WR. And review and discuss if you, after getting the report from the branch auditor, other auditor, you can review that audit report and discuss some special considerations which are required for anywhere in this part. That's it. 600 is very small. There is nothing in this. Now we will begin with 610. That is the similar part, but not of the external auditor, but of the internal auditor. Using the work of an internal auditor. Whenever the auditor goes to audit a company, whenever auditor goes to audit the company, and as per section 138 of the Companies Act, if the company has appointed the internal auditors as per that limits listed company, unlisted public or unlisted private company, then the audit will be conducted by the internal auditors on a recurring basis, that is on a continuous daily basis. Now, as the auditor, external auditor, whenever you go to the company, can you use the work of that internal auditors or not? Can you take the help of them or not? This SS16 gives entirely clear guidance on those things. First, whenever you decided to take the help of internal auditor, first you have to consider what type of work you want to consider. You have to take help with respect to. Sir, the work which is already performed, I want that work has to be considered for my audit. Okay, if it is the case now, then you go for one type of work. No, sir, I don't want the work which is already completed. I want the internal people to work as per my guidance, direction, supervision and review of present situation. That means SS16 is talking about two types of work. One is type 1 and type 1 work and type 2 work. What is type 1 work? Type 1 work is a work in which we call it as internal audit function, where the external auditor can use the work of an internal auditor which is already being performed. Second one is direct assistance. Direct assistance means where the internal people should directly assist the external auditor with respect to his directions, guidance, supervision, everything has to happen. But there is a catch here. Before you take the work of an internal auditor, first of all, you should take the two declarations from two parties. One declaration has to be taken from the management or TCWG, or second declaration has to be taken from the internal auditor's part. So what is that management or TCWG declaration that we have to take? Whenever you find, whenever you ask the management that these people will work for me under type 2 function now, you tell the management you don't disturb them for next 1 month, 40 days, whatever the time agreed. They entirely work under me. They are not working for, they are not your employees for some 30-40 days of time. That declaration has to be taken. Second declaration from the employees is that internal auditors is that whatever information you obtain via the audit, that has to be kept confidential and that should not be disclosed for the management until unless I give the audit reports, because confidentiality is one of the fundamental professional ethics that has to be compulsorily complied. And they started using the work of internal audit function and direct assistance. But there are certain areas where direct assistance cannot be used. See, as an auditor, ultimate responsibility for giving the opinion is entirely on you only. You should give the opinion or the audit report and you should take the responsibility and sign it. But you can take the help of internal auditors only for certain areas in which the judgment is very less, insignificant, or doing some routine transactions, or maybe verification or counting the inventory things. So those things you can use them for giving this thing. So if you look at 610, we will deal with it using the work of internal auditors. One is internal audit function, we call it as type 1 work. Second one is direct assistance, this is type 2 work. Even though you take the help of everybody, the ultimate sole responsibility, sole means single, responsibility for the audit opinion expressed is of external auditor only. So, okay. First of all, before you take the internal audit function help, you decide is it available or not. Evaluate the internal audit function. The ability to perform the task without allowing bias, conflict of interest or undue influence to override the professional judgment. That means, did the internal auditors work without any of these problems? If the company is always trying to control the internal auditors, then whatever the work they performed, there is of no use for me, because the internal auditors are being controlled by the management. Management will tell that certain way that the report has to be prepared. They prepared in such way. That means it is not the independent report. It is always a biased report that should be considered. So, ability to perform the task without allowing the bias, conflict or interest, undue influence to override the professional judgment. Similar thing. First factor. Second factor is whether TCWG oversee employment decisions related to internal audit function. If yes, then you should consider whether to take the decision or not. If any constraints means limitations placed on internal audit function by management or TCWG. That means management is telling, TCWG is telling, okay, don't do March audit, March internal audit, you do only Jan and Feb and give the report. They're trying to impose some limitations. That should not be, that should also be considered whether to use the work of those people or not. Then internal audit is free from any conflicting responsibilities, because if you are an internal auditor and you are only an accounting staff, it is totally wrong. Definitely you will not tell in the internal audit that something is wrong, because self-review threat, you only prepare the accounts, you are only being asked to audit, then you are only telling that accounts are not prepared correctly. No. It is like doing the love marriage and going to the parents' home telling that the wife is beating every day. ನೀನೇ ಮಾಡ್ಕೊಂಡಿದ್ದು ನಾವು ಬೇಡ ಅಂತ ಹೇಳಿದ್ವಿ ನಿನಗೆ, ಬಟ್ ನೀವು ಮಾಡ್ಕೊಂಡಿಲ್ಲ. So that is what the dialogue is. The similar way here also. So whether the conflicting provisions are there, you should not you should consider all these four factors to decide whether you can use the internal audit function or not. This is important. What are the factors to be considered whether to use the internal audit function or not? So level of competence. So internal audit function is adequately and appropriately resourced relative to the size of the entity and the level of operations. That means the entity operations are maybe some 1,000 crores, but they are having staff only one internal audit staff. That is not sufficient. The entity operation is 1 lakh crores, but they have only 10 audit staff. That is not sufficient. You should consider competence, level of competence of those people. When the very understaff is being understaff is there, then they should give a report continuously. Because of which, instead of verifying fully, they just give a report, give the report, give the report, and complete their responsibility. Second one is what is the policies for hiring, training, assigning internal auditors to internal audit function. So once we, even though the chartered accountants, once they enter our company, we give 3 months of training first, then only we allow them to work. That is called as internal audit factor. One of the factors you should consider. Again, whether the internal auditors have adequate technical training and proficiency in auditing. That means, are they professional people or maybe some become guys? You should take it into consideration. Internal auditors possesses the required knowledge about the entity's financial reporting and AFRF. That means they know what AFRF is applicable, what AFRF is not applicable for that. Based on that, you decide whether to use the internal audit function or not. And internal audit function also should have what? Systematic and disciplined approach. What is systematic and disciplined approach? Plan, program, everything that also has to be there. You internal auditor, that is not only for external, that is also even required for internal also. So existence, adequacy and use of documented internal audit procedures covering such areas as risk assessment, work programs, documentation and reporting has to be there. Whether internal audit function has appropriate quality control policies and procedures, SA 220 or SQ7 related items are there or not, that has to be checked. Now, to what extent, in what circumstances can you use the work of internal audit function? You can use internal audit function everywhere, but you cannot use it in certain situations. So what is that certain situations? The function's organizational status and relevant policies and procedures do not adequately support the objectivity of internal auditors. Company only not telling that, okay, I don't care what audit you do, you just give me the report. Whether you do it independently, dependently, or just copy paste it, I don't care. Then don't use that work. The function lacks sufficient competence. All the people there in the company are become guys, or maybe under technical competence guys. But the company is such a AI company, artificial intelligence company. Technical guys are also not there. Our function does not apply systematic or disciplined approach including the quality control. They may ask this as 3 marks question. When the work which is performed by internal audit function cannot be used. Objectivity is not adequately supported. Function lacks sufficient competence. And third one is systematic and disciplined approach is not being followed by the auditors. You can use in IAF for these activities. They have given testing the operating effectiveness, controls, inventory, everything. But you should use less of internal audit function work in certain areas wherever the judgment involved is very, very high. Then you can't use their work. Or the risk of material misstatement at the assertion level has assessed as high. When there is a risk of assessment is high, then you should not allow somebody else to do, only should do that. The less the internal audit function's organizational status and relevant policies and procedures adequately support the objectivity of internal auditors, then lower the level of competence of internal audit function, then don't use it. That is first category of first type of work in case of SS 610. Then second type 2 work, that is direct assistance, determining whether to what extent and what requirements are can be used. Similar things are there here also. First one is you should not use the direct assistance if there are significant threats to the objectivity of internal auditor and they lack sufficient competence or skill with respect to this thing. Then the external auditor shall not use direct assistance to perform procedures. Same things. More judgment is there. Assessed risk of fire misstatement, or related to work with which internal auditors have been involved, are related to decisions where external auditors make in accordance with SA. That means you should not ask the other parties to make a decision telling that okay, you only give the report, I'll just sign it to the internal auditors. You can't tell that. This is same that declaration I gave. I told in the last point. Management will not intervene in their work for 1 month, and they will not disclose any confidential information which is being obtained by employees. Direct assistance refers to use of internal auditors to perform audit procedures under the direction, supervision, review of external auditor. If using the internal auditor to provide direct assistance, then external auditor shall evaluate the existence and significance of threats to objectivity and the level of competence. Evaluation, you should evaluate whether they are trying to create any threats to independence or some relationship kind of things. That has to be checked. Inquiry kind of things. You ask, take a declaration, maybe take something. That is what 610. This is important for 5 marks where they can't use the internal audit function as well as they can't use the direct assistance. Which areas? 4 points are there. This is entirely about 610. Around some 4 standards are remaining. That's it. Once that is done, different entities already done. We are left with items of financial statement. Internal control I will not discuss. You can read it. Ah, 525. That is what 4 standards. 265 is pending. 450 is pending. 525, 30. That's it. 4 standards are there. And one more chapter, that is financial statements item. Once we discuss this is done for the entire marathon. So now we'll begin with audit risk. Audit risk is a risk of the auditor. That is why it is audit risk. Risk of doing the audit. So risk of doing the audit. What is the risk of doing the audit? Doing the audit is not risky, but if you don't do the audit rightly, that there is a risky. Expression of an opinion is an primary objective of an auditor. He should definitely give an audit report or express an opinion. But if he expresses something, some opinion which is inappropriate in such circumstances, then that is called as an audit risk. Because you conducted an audit, you started that risk. That is why you that is called as audit risk. Audit risk is an risk of an auditor of expressing an inappropriate opinion when the financial statements are materially misstated is important. Because expression of an inappropriate opinion, I can tell that financial statements are not materially misstated, then he should have expressed what opinion? Unmodified opinion, but he expressed modified opinion. That means he thought it is it is material. That is why he expressed modified opinion rather than unmodified opinion. He can still protect that, sir. I felt it is materiality is there, perverseness is there. Based on my judgment, I went. But when the financial statements are materially misstated, then you should express modified opinion, but you expressed unmodified opinion. Then you can't what is this? Defend yourself stating that no, sir, I felt it is immaterial. No, everybody is. It is visible. It is material. It is pervasive. How can you treat it as immaterial? You can treat immaterial as material. That's okay because you're trying to prevent the fraudulent activities that is going to happen in the future. But if you go the other way, that is not going to happen. That is why only this part is covered in the audit risk. Risk of an expression of an inappropriate opinion when the financial statements are materially misstated. So, risk of the auditor express an inappropriate audit opinion when the financial statements are materially misstated. Now, this audit risk is consisting of mainly two elements. Audit risk is consisting of mainly two elements. One is ROMM, second one is DR, risk of material misstatement as well as detection risk. So what is this risk of material misstatement? Risk of material misstatement is also consisting of two things. One is inherent risk and second one is control risk. Sir, what is this inherent risk and what is this control risk? First of all, you tell me what is this overall category? Risk of material misstatement. See, when the financial statement is prepared by the management or accounting department category thing, they should prepare all the financial statements that is free from material misstatement. That is the duty of the management responsibility to do all those things. First one is this inherent risk and control risk. There are certain risks which irrespective of the thing whatever you do, that is always there. Depending on the nature of the commodities only, that is being present in the what is this risk in that category. But you try to control it. You implemented some control activities, maybe implemented CCTV camera, security guard, implemented laser light, thumb impression, something you try to control it. But after implementing some control activities also, after controlling some this thing also, risk is not fully reduced. Inherent risk is not fully reduced, because of which the left out risk. For example, there were 100% risk earlier. Now you implemented some controls. So that is reduced the risk to an 80%. That means control are also inefficient to control the 100% risk. That is why we call it as remaining 20% is a control risk. After controls are turned out to be ineffective, you appointed somebody to do the verify everything, try to prevent, detect everything to do it. But after that also, because of some inherent limitations of the process of audit, he can't detect and prevent 100% of the things which are going to happen. That is why there still exists some risk. That is called as detection risk. If you combine all the three risks, then we call this risk as audit risk. Sorry, if I just ROMM, risk of material misstatement, is it related to auditor? No, it is not related to auditor, because auditor has not yet entered into the concept of risk of material misstatement. There is inherent risk in the company trying to control that. They only implemented some control activities. That is not controlling the entire thing. But when you enter the thing stating that I'll try to control everything, I'll try to control the reasonable things, but you fail to control that, then it is your risk. The put together total thing is called as risk of material misstatement and detection risk. Totally it is audit risk. So audit risk is the risk, say material misstated, the auditor fails to express an appropriate opinion on an audit assignment. Audit risk equal to risk of material misstatement multiplied by detection risk. ROMM equal to internal risk, inherent risk and control risk. Sir, why that is being multiplied? If I give an example, in the regular class we discussed in detail, but it is summary, we'll try to keep it a bit short. The example is like, consider there is a supermarket where around 100 items are missing on a daily basis. Can I call it as it is inherent risk because the commodity is such a small thing. People will tear off the or this cover, put it in the mouth, and they go away. So that is why that 100 chocolates are going to miss on a continuous basis. That is inherent risk. You can't do anything with respect to that. So to control that, we implemented some controls. Controls are like, we'll put it in a jar that is kept at the cash counter place, so that people will not take it, eat it, or they try to pack it in a box. Something they're trying to do it. That can prevent 80% of the thing. That is why control risk is 20%. 100%, 100 means I'll take it as some 30%, 20%. After that, you appointed some detector. The detector is trying to control, prevent all those activities by himself. That still there are some 10% risk is left. So if you put together 30 multiplied by 20% multiplied by 10%, or 30 multiplied by 20% is ROMM, and 30 multiplied by 20% is 6%, multiplied by 10%, multiplied by 10%. So that is equal to 0.6% is the total risk of the auditor. Sir, why don't you consider 100 units multiplied by 100 units again 100 units? No. Out of 100 units, your controls are already sufficient to prevent 80 units. That means remaining 20 units purpose that only you are appointing an auditor. 80 units are already secured. Auditor does not need to do anything with respect to that 80. Only 20 has to try to detect it, prevent it, and do it. After out of the 20 also try to prevent, consider maybe some 16 or maybe 18. Still 2 units are left untouched. That is what the risk of an auditor, because he already prevented, detected 18 units. ಅದರೊಳಗಡೆ ಏನು ರಿಸ್ಕ್ ಇಲ್ಲ, ಇನ್ನು ಕಂಡಿಡದೆ ಇದರೊಳಗಡೆ ರಿಸ್ಕ್ ಇರೋದು. So risk of metal misstatement is ROMM multiplied by detection risk, or ROMM is nothing but IR multiplied by control risk. So it is an auditor to keep audit risk at an acceptably low level. Detection risk must be inversely adjusted based on an assessed ROMM. Higher the risk of metal misstatement, lower the detection risk required, more the extensive audit procedures are required. For example, the moment you know that ROMM is more, you try to do more audit procedures. The moment you do more audit procedures, the detection risk automatically comes down. Or when the ROMM is less, you try to perform less audit procedures, because of which your detection risk will automatically increase. So that is why risk of metal misstatement and detection risk is inversely related. So risk of metal misstatement can be at two levels. One is financial statements level, second one is at the assertion level. Sir, what is this financial statements level? Financial statements level is a level in which this risk is subsisting in majority of the items of the financial statements, like an entire financial statements as a whole. But what is this assertion level? Assertion level is something in which there are only one or two points, maybe inventory, maybe fixed assets, maybe cash in hand, maybe cash at bank, maybe other things, liability things. There the risk might exist. That is what we call it as assertion level. Assertion level is items wise. The financial statements level is the entire financial statements as a whole. Read those 4 points. Hello guys, good morning. Myself Viraj, as you know in the last videos. So today we will be discussing on the non-essay based chapters. So that is the different types of entities, financial statement, audit, and preferably audit risk and internal controls also we'll try to touch it. I feel you can read that, internal control and all. Audit risk I'll just cover it. After that we'll go to the remaining standards at the end. So now we will begin with different types of entities. See, this different types of entities is one of the practical chapter where it has to be learned by practical only. There is nothing I can teach here. If you think common sensely, definitely it is going to add up to your uh, thing. So, audit of bank is also done in the last class. Now we'll go for audit of different types of entities. Sir, how many entities are there? There are so many entities, out of which the examination mainly highly tested areas are this government audits, the government bodies audit, then this NGO, many times charitable institutions, education, hospital, cinema also, hotel, cooperative society. These are the things highly tested in the examination. So we'll try to cover them first. First we'll go for educational institution. Educational institution. So it is like if you are an auditor of any school or college or any university, what are the things we are going to check in that institute, educational institute? What are the primary things which you will check? What are the what is this, recurring things you will check? What are the yearly things which you will check? So all those things which are going to discuss here. Educational institutions, job, hospital, educational institutions. If you see here, that is audit procedure for educational institutions. Generally the school or college or anything, if it is a school or college, generally it will be a trust or it will be a society, generally, unless until it is anything else. So generally you should go and verify the trust deed or regulations, and if you want you can even read the minutes of the meeting of managing committee, how they are incorporated. Sir, are they trust or are they society, that you have to read it and go through the minutes to understand how the managing committee is taking the decisions. That is a general point. But when it comes to the main point, this is separately asked for 4 marks question in the examination. As an auditor, how I fee collected from the students in an educational institutions. As an auditor, first one which we have to verify is, you think on a common sense basis, with respect to fees collected with the students, we have to check how many students are there. We have to check what is the fees collected, what is the fees per student, what is the discount given, why the discount is given, is it given by the authority, or all those things has to be checked here. Again, if there is any arrears in the last year, has it carried forward in the next year? If there is any bad debts, is that written off? First, you should check the names in the students fee register. Again, check the fees received by the comparing counterfoils of risk. Repeat. Thank you. Check fees received by comparing counterfoils. Counterfoils means free receipts. Free receipt. Fees receipt and compare with that. And ensure that only receipts of that year is recorded. See, sometimes what happens is some parents make admission for all the 10 years, one first standard to 10th standard. They will pay all the fees in the first year itself. Then you don't recognize all those 10 years fees in the same year. You should recognize only 1 year. Remaining 9 years has to be in the liability of the balance sheet. Second year comes, again take the second year fees and put it to the P&L. Again third year, again fourth year, it is how it has to be recorded. Again, if there is any advance, that should be carried forward if there is any advance of fees. Irrevocable amounts are written off. Irrevocable amounts means consider a student has attended the class school, but he did not pay the thing. He took the TC also, marks card, everything gone. He has no option. There is no need to come back to the school. Then you have to write that off. Check admissions fees with the admission slips signed by the head of the institution. Verify free scholarship and concessions granted by authorized persons per managing committee as per managing committee rules. That means if you see, in sometimes they tell that if you score 90% in any examination, you will get 90% scholarship, all those things. Even our academy is also running now. If you score any subject 95 plus, then you will get 90% of scholarship in case of CA Foundation, CMA, whatever you want to do, you will get that. So confirm fines for the late payment or absence collected are remitted under the proper authority. If you don't pay fees on time, then they will levy some penalty. That also has to be verified. Confirm hostel dues recovered before the students' accounts are closed and caution money deposits are refunded. Before you refund, you check that is there any due for a hostel, mess, all those things. Check it. If it is nothing, then you can refund and close the register of the students. These are the things which you have to verify. When it comes to the examination, at least you should write some 6-7 points in the exam. Check the names in the fee register. Again, compare the count to full receipts. Ensure that only current year receipts are recorded. If there is any advance given, that should be carried forward. If there is any non-recoverable amount, that should be written off. And if you give any scholarship or concessions, is it given by the proper authority or not? And if there is any deposits, security deposits, before returning that security deposit, check that is there any hostel dues paid or pending or completed. Then the school or education institutions will also have some other receipts and grants. Mainly the rental income from landed property with the rent rolls. It's like consider we are having 5 floors building, out of which 5th floor is not useful, so we give it for somebody else. Okay, check that rent receipt is for the rent agreement. Watch income from endowments, legacies, interest, dividends from investments. All those things, if you have extra money, you would have invested in shares, stocks, FD, all those things. Check all those things are correctly recorded or not. Even inspect the securities also. Verify government or local authority grants with the memorandum of grant. What is a memorandum of grant? Whenever they sanction the money, they tell that for what purpose it has to be used. That is called as sanction letter kind of thing. You should verify that. Ascertain reasons for disallowance of expense. There are many cases in income tax. For example, 40A3. If you don't pay, if you don't deduct any TDS on the domestic payment, 30% TDS will be disallowed. If you don't deduct TDS in case of foreign payment, 100% TDS will be disallowed. Everything is been there, that you have to verify is there any disallowance reason. Then that is the income part. Now comes expenditure. You should verify provident fund money of staff invested in appropriate securities, because whenever you pay the salary, you will deduct some salary as part of PF, ESI, everything that has to be deposited the appropriate authority. Again, you should watch the donations with a list published in the annual report. If you made any donation, because we are discussing the expenditure, that means you donated to somebody else. You check with that annual report. Confirm money utilized for specific purpose. If it is earmarked means what? Set aside. That means, sir, we want to construct one more hostel here. That is why we kept 20 crore rupees aside. Okay, is it being used for only that purpose or not? Watch all capital expenditures and verify with the sanction from committee as contained in the minutes book. If you do any capital expenditures like school, building, bus, land, or any other thing, is it approved by the appropriate committee or not? That has to be verified. Watch establishment expenses. Inquire into any unduly heavy expenditure. Unduly means unnecessary heavy expenditure. Verify excess over budget was duly sanctioned by managing committee. Earlier you thought, sir, I will construct the school building in 10 crores, but actually it went to 11 crores. Now excess budget has increased already. Now that 1 crore has to be again re-approved by the managing committee. Sir, 1 crore extra happened, please approve it. Then verify increase in the staff salaries are sanctioned and minutes committee. That's it. Then comes assets and liabilities. It is similar for every type of entity which is there. So report hold away arrears on account of free fees, dormitory, rents, etc. Confirm caution money and deposits shown as liability in the balance sheet, because you have to refund that back. Caution money means it is a deposit, caution, a security deposit. Because you have to refund that back, that is a liability, it is not your money. Not transferred to P&L account unless non-returnable. When it will become non-returnable? For example, you damaged any of the property of the hostel or school, then they tell that okay sir, we will cut ಮಾಡ್ಕೊಂಡು ಉಳಿದಿದ್ದು ಕೊಡ್ತೀವಿ. We will deduct the money and we will pay it. The deductible money you can put it as revenue part. Verify investments representing endowment funds for prices are kept separate. That means whenever you do investments, whenever you get some endowments, that has to be kept separate. Excess income accumulated or invested with corpus. Excess income accumulated and invested with corpus. Corpus means it is the primary fund of the thing. It is the contributions or share capital kind of thing that has to be verified. Ascertain system for ordering, inspection on receipt and issue of provisions, foodstuff, clothing, equipment is efficient and bills daily authorized before payment. Whenever you want to buy any equipment, like if you are having science school, you need science equipment, that pendulum, that physics lab equipments, all those things has to be taken. Or even the clothing. What is clothing? Maybe hostel bed clothing, or maybe that some clothing related. Food stuff or provisions. Provisions means hostel related. This grocery kind of things are called as provisions. Everything has to be, whenever you make a payment, that should be authorized. Verify inventories of furniture, stationery, clothing, provisions and all equipments. Then lastly, you should comply with confirm refund of taxes deducted from investment income from has been claimed and recovered. Verify annual statement of account including separate statements for poor boys fund, games fund, hostel and staff provident fund, etc. So what is this tax deducted from investment income? Whenever you are required to invest it somewhere and your income exceeding I think 40,000 per month interest income, 40,000 or 50,000, then you are supposed to, the bank will automatically deduct the income tax from the interest income and they will pay the remaining money. But if you are not having any income, or if you are not supposed to pay any taxes to the government, then the deducted income has to be filed by income tax return and you should claim the income tax refund. That has to be done or not has to be checked. Again, if you give any poor points like scholarship kind of thing, that also has to be checked. This is about educational institutions. Now we will discuss with hospital, respect to hospital. See, when I say hospital and school, the main difference between hospital and schools are hospital has patients, school has students. Their students fee register will be there. Here hospital patients register will be there. Their school equipments will be there. Maybe science lab, physics lab, any other lab. Here hospital equipments will be there, like Caesar or that operational items, ICU items, that oxygen cylinders, all those things. Here there you get money by way of fees. Here you get money by way of hospital charges, bill charges. Again here the fixed equipments are mainly that what is this, operational items or anything which can be used for more than once. Again their fixed items are board, maybe the bus, maybe the building, the category things. Here sometimes what happens is hospitals can be private also, hospital can be government also, anything not other partially government and partially private also. And there are some donations also which will be coming here. Then again everything has a budget that has to be spent within the budget. Again, if you goes beyond the budget, that you have to take a special permission or a authority. Then inventories are there. The inventories are like what, that cotton, tincture, that or this something which will be used like first aid kind of things, are all those things are this thing. Mainly there in case of school, the hostel will be there and mess canteen will be there. Here hospital canteen will be there, along with that pharmacy will be there, and wards, general ward, special ward, and fees has to be collected according to that. So as an auditor, you should watch register of patients with copies of bills issued to him. Verify bills with attendance records. Verify bills with attendance records. For example, you tell that sir, person has admitted and we bill 10 lakh rupees. Okay, you give me the admission record first, whether he came or not in. Check the cash collections are entered in the cash book with receipts, counterfoils and other evidences. Whenever you get some cash, is it entered in the cash book? Again check the counterfoil receipts. What is counterfoil receipts? Whenever you pay the money, they will give one receipt that is one carbon copy will be there. That carbon copy and money you cross check it. Again see with reference to property and investment register that all income that should have been received has been received. If there is any income that has to be received, that has to be compulsorily received. Whether that is received or not, you have to check it. If it is not received, then go by what is this? Arrears are yet to be received, outstanding. Ascertain that legacies and donations received for a specific purpose has been used in a manner agreed upon. For example, somebody gives a donation of 20 crore rupees. Sir, you construct only what is this? Heart related hospital, one separate wing you construct with all the equipment. Then whether the 20 crore rupees specifically being used for that hospital heart related wing or not, cardio. Then trace all the collections of subscriptions and donations from the cash book to the respective registers. Okay, whenever you do any purchases and expenses, and even verify the capital expenditures also, that has to be incurred with a prior sanction. What is prior sanction? Prior approval of all the managing committee or the top level people. And verify the grants from government, local authority are duly accounted for. Whenever you get some money from any authority, that has to be accounting as the donation as per AS. Which AS? Tell me. Yes? Donation. It's okay. AS 12. Donation. Verify the refund in respect of taxes deducted at sources has been claimed. For example, same also sometimes hospitals are exempted from payment of taxes, provided if you spend some amount of money in some activities, capital activities. But whenever you buy some capital equipments like bus, all those things, if the base ex-showroom price is more than 10 lakh rupees, then definitely that has to be TCS will be collected. So that collected TCS, you have to file the income tax return and you have to claim the refund. Whether that is correctly refund claimed or not, you have to check. Again, compare the total income and expenditure items with amounts budgeted. Report significant variations to trustees or managing committee. Consider you wanted to do that heart related wing at 20 crore rupees. Actually, you incurred 30 crore rupees. Significant difference is there. Then go to the managing committee or trustee of the hospital. Then tell that, sir, this has happened. Please approve it. Then examine the internal checks as regards to the receipts and issue of the stores. Stores means mainly the inventory category. How do they keep the scissors, needles, or injections, or tincture, small tablets, everything. See that depreciation has been written off against all assets at appropriate rates. Inspect bonds, share scripts, title deeds of properties, and compare with the particular in property and investment registers. Whenever they have in the balance sheet on the asset side, sir, I have 10 buildings, 20 cars, all those things, you go and verify the title deeds. If they tell that, sir, we have invested in some shares, okay, take the share scripts and again inspect the bonds also if they have invested somewhere. Again, obtain inventories, especially of stocks and stores at the year end. Check a percentage physically and compare a total values with the ledger balances. It is like 501. If you remember that physical inventory counting, the similar thing we have to do here. Again, lastly, if you have any doubt with respect to anything or you want to get any confirmation from anybody, so go for management representation. That is which standard? 580 and certificate with respect to various aspects covered during the audit. Sir, I done these things. You are telling these things in a oral format. Please give me in written format so that I can protect my interest at a future point of time. This is with respect to hospital. So now we will discuss with respect to audit of hotels. So in case of audit of hotels, what happens is the similar things only. Again, patients will be replaced with customers, clients. When I say hotel, there are two mainly items that has to be checked. One is hotel for accommodation that is given like room rents, and one more important is the restaurant services, food and restaurant services. If they have the bar, that also has to be taken care under the F&B category, food and beverages category. Now, as an auditor, first of all, you check whether hotel has been established or having that constitutional documents, maybe private company, maybe LLP or something, that has to be verified. After that, whenever you go into the hotel, check the internal controls are working properly. Sir, what is that internal control? Somebody coming into the hotel without booking and directly going into the room, directly going out of the room. That means that the internal controls are not working properly. Why? Because you kept cash counter or that front office at the top floor. All the rooms are open. Whenever somebody wants, they can come in, they can go out. No, that is not good. You try to have some internal control, have some CCTV camera, not inside the room, outside the room, and try to have some securities with respect to any litigation or this. If there is any quarrels which is happening between the customers and hotel staff, Then mainly coming to room sales and hall bookings, sometimes hotels will also have one LAN category of all 200 seating capacity, 500 seating capacity. So if you have a room, whether the room rents are charged as per the appropriate rates given or disclosed by the management or not, that has to be charged. Again, if there are any concessions or if there are any point redemption, for example, if I go for any Taj hotel, I have some Taj points. If the room rent is 10,000 and I consider I have 2,500 points, 1 point equal to 1 rupee, then the deduction you pay 7,500 and 2,500 points will deduct it. So why is it authorized or not? Every hotel of Taj, is it being authorized? If not, sir, it is allowed, it is not allowed. If there is not allowed, then how do you cater it to the other part? Then if there is any special discounts, and hall bookings also. Hall bookings, if you have anything, you have to verify the hall booking register as well as the money received and guests accommodated, and if you give anything. Then comes inventory. What is the inventory for hotel? Mainly the bed sheets, cutlery, food stuff, groceries. Is it properly accounted, kept at the safe custody of the officer of the hotel? And sometimes hotels, not small hotels, big hotels will have silver plate thali, gold plate thali. That is coming under what? Capital assets or inventory. That has to be like quasi capital assets or quasi inventories. It depends on the hotel treatment. They can treat it as inventory also. They can treat it as capital asset also. In that case, they have to account it for properly value that at the balance sheet date, because that is not just a plate. That is some metal. That the prices of the metal is being fluctuating continuously. That has to be verified. After which, if the fixed assets are there, for example, cot, bed, chair, ACs, hair coolers, air cooler, TV, or maybe any other capital asset, that has to be verified by an auditor continuously. And sometimes in case of season time, marriage season time or maybe other time, there will be too much of customers inflow. In that case, the staff you have may not be sufficient. That is why you might go for casual labor. Casual labor, maybe daily wages or maybe monthly contractors, or maybe 2-3 months contract labor. In that case, you have to verify whether money is being correctly paid, entry is correctly entered, TDS has been deducted, everything has to be verified. Then, because your hotel may be listed on some agents, maybe Oyo Hotel, maybe Make My Trip, maybe Go IPO, maybe what is this? There are multiple websites. In that, if you are listed and somebody books in that and come to your hotel, you should pay some commission to the agent. Whether that commission is properly as per the agreement or not, and is it correctly being paid or not, that has to be verified. So these are some hotel related procedures. So see there, internal controls. Pilferage is the greatest problem. Internal controls is paramount. Paramount means very important. Verify a few restaurant bills by reference to KOTs, mainly kitchen order tickets. It is like, in many cases what happens, whenever you sit on a table, the waiter comes and takes order in a tab or mobile kind of thing. The moment he clicks OK, you don't need to go and tell it in the kitchen. Automatically the order is gone. Whether it is correctly going or not, that has to be checked by placing some KOTs. We call it as kitchen order ticket. To ensure revenue cycles controls are in order, satisfy that all taxes collected from occupants on food and occupation have been paid to the proper authorities. Mainly the GST part they are talking here, because on food and all those things sometimes 5% is there, somewhere it is 18% is there, depending on the service they give. You should collect it from the customers and pay to the government. Again, with respect to room sales and hall bookings, you should check charges for room sales normally posted to the guest bills by receptionist or front office or night auditor. In case of large hotels, there will be auditor not on a weekly or monthly basis, but a everyday basis. My full day the work happens. At the night he or this concises everything and try to put it in a audit format. Now consider I checked in as a Viraj, consider Ramya checked in, you also checked in. Whenever I am there for 2 days, you are there for 3 days in hotel, you are there for 10 days. 2 days bill has to be posted in my name, 3 days has to be posted in your name, 10 days has to be posted in their name. That means the bill has to be posted to the respective customers. They should not charge me 10 days instead of Ramya. They should not me charge 2 days, you instead of 3 days. That has to be checked first thing. Sir, how do they check it? Depending on the check-in date, check-in time, check-out date, check-out time. Payment date, you can go through everything. Sources, you go even check the guest register. carry out the audit test to ensure correct guest charge for the correct period. 2 days for 2 days rent, 5 days for 5 days rent. Investigate any differences between charged rates and guest bills and the standard room rates. Why there is a difference, sir? Because he's a regular customer, we give always 10% discount. Okay. Examine housekeeper's daily report of rooms occupied and beds. Sometimes housekeepers are the people who go and clean rooms on daily basis. They prepare a report. Sir, we cleaned room number 201. 201 is empty. Nobody has occupied this. So depending on that, you have to verify. Actually, that reports will not be kept. They try to dispose it off. Tell the management, sir, please keep it correctly so that we can continue auditing that. Ensure sufficient reports available for testing with the guest register and individual guest bills. Ensure proper valuation of occupancy in progress at balance sheet date, because someone will enter the hotel at 31st morning and they'll book for 3 days. 31st, 1st and 2nd, 31st of March, 1st April, 2nd April. In that case, that is still in process. You should categorize the room rents based on the respective period, because 1 day comes under the current year and 2 days goes for the next period. That has to be verified. Then when it comes to the food and beverage, 1 second. So then if the hotel has any food and beverage inventories are readily portable and sealable, for example, packed drinks, packed food, all those things, that has to be checked. Check the documentation carefully. Keep areas with large inventory quantities locked. Whenever you keep rice, all those things, that is very important. You keep them in a locked position, and the key should be retained at the department manager. You should not give it for every assistant to the hotel. Released only to the trusted personnel. That means you should give only the items to the trusted personnel or send him in. Many hotels use specialized professional valuers on a continuous basis for mainly what? Mainly valuation of the cutlery, silver, gold related kind of things. Auditor should consider attending physical inventory taking and carry out pricing and calculations test. With respect to fixed assets, similar for every category of entity. Accounting policy for fixed assets may be differ between hotels. Many hotels account for quasi-fixed assets such as silver or cutlery, silver and cutlery on inventory basis. Silver cutlery means belly, so quasi-fixed assets. Ensure detailed definition exists are closely followed. Costs of repairs and minor renovation treated as revenue expenditure. That means anything which is not increasing the capacity of the hotel or anything, we should not treat it as capital expenditure. We should put it under revenue expenditure. Cost of major alterations and additions are capitalized. If you construct one extra floor, if you construct 2 extra rooms, or maybe one DJ party hall, capital expenditure, that should be capitalized. If you hotel operates largely and casual labor, then check the wage payment registers are frequently inadequate. Auditor should ensure defalcations. What is defalcations? Does not take place by suggesting proper controls to management. What is defalcation? Mainly not putting directly what is required to be entered. Then travel agents. Ensure money is recovered from travel agents. Why money is recovered from travel agents? We should actually pay, sir. Why they are recovering? Whenever I book through Make My Trip, money is going for Make My Trips account. Then they have to give it to the hotel at later point of time. But after, what is this? Commission paid to travel or booking agent should be checked by reference to agreement. What happens is, if I pay 5,000 for Make My Trip, they tell that 20% is our commission. So 5 into 2, 1,000 they will keep it, 4,000 remaining they will give it back to the hotel. That receipt of 4,000 and 1,000 commission is correctly verified or not, you have to check it. This is for hotels, audit of hotels. So now we will begin with an important area, that is cooperative society, very important area. Sir, what is this cooperative society? Cooperative society is like voluntary kind of entity which is started for the purpose of mainly supporting the rural or semi-urban areas, in which they lend the loans also, they give. See, cooperative bank is different, cooperative society is different. Cooperative society's main work, as I agree, money is also being dealt. Again, other than money is also many things are there. Maybe subsidized items, maybe fertilizers, seeds, all those things are mainly dealt there. So an autonomous association of persons united voluntarily to meet their common economic, social, and cultural needs through a jointly owned enterprise that will eliminate the middlemen and exploitation from outside forces. Every cooperative society must get its accounts audited at least once in a year, and that includes overdue of debts and valuation of assets and liability. These are the mainly two things that has to be covered in audit of cooperative societies. Sir, what is overdue of debts? In because cooperative societies are there in rural areas, all the farmers or maybe the rural area people may not pay on a continuous or timely basis to the cooperative society. They tell that okay, I'll pay it after 1 year. ಬೆಳೆ ಬರಲಿ ಆಮೇಲೆ ಕಟ್ತೀನಿ. Then you have to check that overdues and the valuation of asset. So registrar, collector, or authorized person has full access to books, accounts, papers, securities. Offers must provide all requisite informations. Officers must provide all requisite informations. Whenever you, as an auditor, you want to verify everything, okay, we have every right to go verify. And if you need any explanation, say, tell to the officer, they will definitely give that details for you, whatever you want. And who can be a auditor? He should be a chartered accountant. But in some states, what happens is, persons who are holding government diploma in cooperative accounts or accountancy will also be allowed to appoint as an this cooperative societies auditor. Again, I forgot to tell you one thing. Cooperative societies are two types of cooperative society. One is multi-state cooperative society, other than multi-state cooperative society. Sir, what is multi-state cooperative society? Any cooperative society that is there in presence in more than one state is called as multi-state cooperative society. Any society which has presence only in mainly 90 majority is there in only one state, that is called as normal cooperative society. So who will appoint the auditor? Registrar will appoint the auditor. Sir, which registrar will appoint the auditor? Registrar of company alla, registrar of societies. Registrar of societies will appoint the auditor. So restriction on shareholding. Here this can be asked as an MCQ question or maybe 3 marks question. One second. So restrictions on shareholding. If you are a member of cooperative society, either you can have maximum of 20% of share capital or 1000 rupees worth of share capital. So not exceeding a member other than registered society, that means other than registered society cannot hold more than 20% of total share capital or shares exceeding 1000 rupees in value. Sir, 20% total share capital is 1000 only. Can I hold 200 rupees worth of share capital? Yes, because that is 20%. Sir, can I hold 250 rupees? No, that is not possible, because even though you tell there's 1000 rupees is the maximum value, but that should be capped at 20% of the capital of the society. Then whenever a society want to give, a registered society shall not make any loan to any person other than a member. If you want to give the loan, give only to the members of the society. That is why whenever somebody comes and asks for the loan, they try to make them first as members by giving 1 or 2 shares, then they'll issue the loans. With special sanctions of registrar, the registered society may make a loan to another registered society. One society can make to other society provided they have the prior sanction of registrar. Then can a society borrow the money? Yes, a registered society shall accept the loans and deposits from non-members subjected to restrictions and limits by bylaws of the society. Then investment of the funds. This is also important. They may ask this for 4 marks question. Where the society has to invest the funds. Society can invest the funds in central or state cooperative banks or approved securities, or shares, bonds, debentures of societies with limited liability or other cooperative banks, as well as you can even invest in government permitted investments. These are the main things. If you have the main material, you will understand that what are the things which are allowed there. Appropriation of profits. What is appropriation of profit? It is like distribution of profit. Where do you allot that profit? A prescribed percentage of profit must be transferred to reserve fund before distribution as a dividend to the bonus or to the bonus to the members. How much is the prescribed percentage? It is 25% is statutory percentage. If you make 100 rupees profit, you want to give the dividend for or bonus for anybody. Okay, first you keep it 25 rupees aside, then only you can give it for other party. Then charitable institutions with the sanction of registrar may contribute up to 10% of net profits. What is 10% of net profits? 100 rupees profit you made, na 25 rupees you transfer to reserve fund. After that 75%, 75 rupees is left. Out of 75 you take 10%, not 10 into 100, 10% into 100. So after compulsory transfer to reserve fund, may make it charitable to charitable endowment fund 1990. That is, see, look at the language. It is may contribute. It is not compulsory. Again, mainly cooperative societies, main problem is the people who borrow the money will not repay in the immediately. They think that okay, Sidramaya will Salamanna Martana, Kumarswamy Salamartana. That is why they don't pay. That is why you should classify the old debts from 6 months to 5 years and more than 5 years one category. Auditor must also ascertain whether proper provisions for doubtful debts are made or not. See, doubtful debts in case of bank credits, that is totally different. We will make that as provisioning requirements. See, here it is difference. So if there is any overdue interest, that must be excluded from the interest outstanding and accrued or due while calculating the profits in practice, and overdue interest is reserved is created. That means if you already went on accrual basis and that has become overdue, when it is overdue, whatever the interest which is accumulated on overdue principals, then you take it out, put it somewhere, but because that is not received and that is not going to be received yet. And whenever there is a bad and irrevocable losses, that must be certified by the auditor before writing off against bad debts funds or reserve funds. Otherwise, managing committee must authorize the write-off. Sometimes what happens is the cooperative society, because it is a rural area, they will only customer in the cooperative society. Okay, you borrowed 10 lakh, na? Don't worry, give me 2 lakh. I will write off everything, and then everything gets off. That is how they try to do it. That is why you should take the appropriate authority auditor certificate or management committee certificate. Valuation of assets and liabilities, same things. Ascertain existence, ownership and valuation of assets. Fixed assets, cost minus adequate depreciation has to be charged. Incidental or installation expenses properly capitalized, because that is part of purchase of capital asset only. Any expenditure incurred till the asset is bought to its intended use has to be capitalized. Maybe installation, maybe everything. Current assets are there, na? Then cost or market value, whichever is lower. Then all known liabilities brought into the account. Contingent liability stated by way of note. If it is contingent asset, what can be done? Contingent liability will give it by way of note. Contingent asset either do we give it in notes to account? Financial statement? No, provision is not made. That will be disclosed in the board report. No, they will never come in the financial statement. They will just announce it, sir, we are supposed to get so and so amount of money. That is not told to the shareholders because of conservatism concept. Record all the losses but not all the probable profits. Conservatism concept. Loss ಆಗೋದಿದ್ರೆ ರೆಕಾರ್ಡ್ ಈಗ ಮಾಡ್ಬಿಡು. ಪ್ರಾಫಿಟ್ ಆಗುತ್ತಂದ್ರೆ ಆದ್ಮೇಲೆ ರೆಕಾರ್ಡ್ ಮಾಡು. Then you should even stick to cooperative principles. Then other acts and rules which are applicable, you should go that. You should verify the register of members and passbooks. Examine entries in the members passbook regarding the loans given and repayments. I think I gave an example of our my native place cooperative society. Whatever the money they sanction, they keep 10% by that people only. If you remember that example, but out of 80,000 if they sanction, 72 they will give it, and 8,000 he will use it for your personal purpose, his personal purpose. But remaining, whenever I am going to repay it, they will collect only 72,000 only. But 8,000 that should not be collected. They take that 8,000 around, I think 100 crore rupees is the turnover of that thing. 100 into consider 10% is 10 crore. He lend the 10 crore rupees for outsiders at 3% interest, personal interest. And confirmation of loan balances in person is very important. That means if you want to verify any loan balance with respect to maybe Ramya, okay, talk to Ramya, tell that do you have any loan in this cooperative society, or call her, then talk to them. Especially in rural or agricultural credit societies where members may not be, may be illiterate. Sorry, may not be literate. Checking done on the test basis as per the auditor's judgment, because sometimes what happens is okay, ಇಲ್ಲೊಂದು ಒಂದು pension marks ಕೊಡ್ತೀನಿ ಅಂತ ಹೇಳಿ ಬೇಕಾದ್ರೆ ಸೈನ್ ಮಾಡಿಸ್ಕೊಂಡ್ಬಿಡ್ತಾರೆ. Or we will give the pension, please put the thumbprint. Then they will use it for maybe one paper ಅವಶ್ಯಕತೆ ಇದೆ, they will do it for some 4-5 papers. Remaining 3-4 papers they will use it for their personal. They will open the account, they sanction the loan in that fictitious name. The customer will not know only. Passbook only they will also keep, and that thumb impression they will input, and they will take the money, they will use it. They try to do that. That is why you should go for in-person confirmation. Special report to the registrar. If the auditor notices any serious irregularities, may report to the registrar. Cases requiring special report, personal profiteering by management committee, as I told that my village example, personal profiting by managing committee. Detection of fraud, specific mismanagement examples, decisions of management against cooperative principles, disproportionate advances to vested interest groups in urban cooperative, etc., that has to be given to the registrar. Audit classification, depending on the assets, loans, everything, compliance part, the auditor will classify as a society into class A society, class B, class C, class A, category 1, 2, 3, 4, that type of societies are there. And if you have anything to be discussed, you can go and discuss at any time at managing committee. This is with respect to normal cooperative society. Then there is something called as multi-state cooperative society. Sir, what is multi-state cooperative societies? The same things where they have presence and operations in more than one state. So whenever it is there, here some strict provisions are there. For example, Amul is multi-state cooperative society, but Nandini is a Karnataka state cooperative society. It is not having any extra presence. So multi-state has the MSCS Act 2002, multi-state cooperative society. And who should be an auditor? If you remember, in case of normal society, we told a chartered accountant or any person who is holding government diploma in cooperative society can become an auditor. Here that is not possible. Only a chartered accountant can be appointed as an auditor. Other persons are not eligible at all. Chartered accountant means CA plus holding COP, certificate of practice has to be there. Then only can be an auditor. So who will appoint? The same thing with respect to company category thing is there. First auditor is appointed by board of directors within 1 month of the registration, but only change is in case of company that was 30 days. Here it is 1 month. 30 days is different than 1 month. You will hold the office until the conclusion of the first AGM. If the board fails, then society in the general meeting may appoint. Subsequent auditors are appointed by society at each AGM only. Holds office till conclusion of next AGM. Here there is no 5-year concept. Here it is every year concept. 1 year you do the audit, next year also you get appointed, again you do the one more audit. There is no cooling off period. You can do audit for 20 years, 30 years, 40 years. But every year you have to get appointed. So right of access at all times to books. Every auditor has the rights with respect to, you can access the books, accounts, vouchers. Entitled to require from officers or employees such informations and explanations as the auditors may think necessary. Similar rights with respect to section 143 of Companies Act. Then mandatory inquiries. Every auditor has to make 6 inquiries. If you remember, we discussed section 143(1). There are 6 inquiries. So all those 6 inquiries here also has to be made compulsorily. So whether loans or advances on the basis security as properly secured in the and not prejudicial to the interest of the society of the members. Same point. First point. Second point is whether the transactions representing merely book entries are not prejudicial to the society. Second point. Whether personal expenses have been charged to revenue account. Third point. Then whether shares to be allotted for cash and whether cash has actually been received or not. That has to be checked. Fourth point. If not, whether position in books or balance sheet is correct and not misleading. That means if it is not correctly there, then adjust it. There 2 more entries are also there, 2 more inquiries. Here only 4 inquiries are there. Only 4. Same as section 143(1), but only 4 points. Then what should be there in the audit report? Similar to the thing. Report to members that accounts give a true and fair view, balance sheet, state the affairs of the end of the financial year, profit and loss account of the financial year. Report shall also state that whether all the information and explanations obtained, whether proper books of accounts kept, whether branch reports received and how dealt with. Everything. See, whatever the report is there in case of normal 700 series, similar report is also there here. And special audit is required. When special audit is required only when government company definition. Government company where more than or equal to 51% is held by government, central, state, or central plus state, state plus state, central. It is multiplication combination. Then here also same. If any central government or any government, state or other states holding more than or equal to 51% in any cooperative society, then they are supposed to go for special audit in case of the multi-state cooperative societies. So special auditor, who will be special auditor? Special auditor is appointed, and whatever the rights and duty, whatever it is there for normal societies auditor, the same rights and liabilities will also be there for this thing. This is important. They may ask for 4 marks. Then there are some inquiry and inspection, not so important. Whenever federal cooperative society, federal means central cooperative society, is affiliated or a creditor who is not holding at least 1/3 of the board members or more than or equal to 1/3 of the total members. There are 3 things here, 3 or 4. One is it is affiliated to federal cooperative society, or there is a creditor, or there is more than or equal to 1/3 of board members, or more than or equal to 1/5 of members. If anybody want out of this, they can give 15 days notice to the society before holding the inquiry, and whenever that some auditor comes for the purpose of inquiry, then free access to books, accounts, department, documents, securities, cash, etc., etc., everything has to be there. And if they want, they have a summon and examine any person on oath. Any person on oath. And central registrar shall communicate the report to society, financial institutions affiliated, and persons authority whose inquiry. Okay, that's okay, same, nothing important. Here also same. Only change here is, I think creditor is also there, right? Yes, same thing. Same. Here also 15 days notice. But here it is inspection, not inquiry. Inquiry is generally talking to the people. Inspection is mainly going for the papers, books, everything getting inspected. So once everything is done, within 3 months you should give the report to the registrar. That is what cooperative societies. So now we will discuss cinema. So similar things with respect to hotel, but here the difference is the process is different. In case of cinema, there will be continuously 3-4 shows running. Again, we should take the film rights on higher basis. Again, we have some food and beverage, popcorn, all those things. Is it run by the film theater? Is it given outsourced to anybody? Again, there will be some security people. Again, maintenance, cleanliness, housekeeping, that has to be taken care. Mainly thing is tickets part. What is ticket? Consider I went and stood in the queue. I took A13 queue, row number A, seat number 13. Again, you also went to the, like after me you came. Again, you also being issued A13 seat only. Multiple tickets should not be issued for a single seat. Again, tickets which are issued for the last show should not be allowed for the current show. Because last show is already completed, the same seats are being allotted for the other people now. So you should verify entry only through the printed or serially numbered ticket bound into books. Tickets for each show or class are different. Same class tickets run serially. That means if you give same day 3 shows, morning show you keep orange color, evening show you keep blue color, again green color type of tickets. Same class of tickets should run serially. That means if you are issuing same tickets, 1, 2, 3, 4, 5 continuous has to be issued. Separate series issued for advance booking. Tickets inventory in custody of a responsible official, because that is the important revenue for the cinema theater. And confirm that at the end of each show, a statement of tickets sold is prepared and cash collected is agreed with it. If you sell 100 tickets every show, whether 100 tickets multiplied by rate per ticket is matching or not, that has to be checked at the end of the show. And if anybody has a free passes, for example, verify that record is kept free passes and that these are issued under the proper authority. In case of PVR only, they have a scheme called as I think you should give some 249 or 349. They'll allow you to go and sit for 4 shows in a weekdays, not for the Saturday, Sunday. I think Monday to Thursday, 4 days. You can go for any movie, but not for the first show. Oh, we call it as the VIP pass. In PVR they have. If they have anything that has to be accounted. Tax reconciliation, if they collect tax on GST and the total number of tickets issued for each class, verify and watch and verify the tax returns filed each month. Watch entries in cash book in respect of cash collected on sale of tickets for different shows by reference to daily statement records to the tickets issued. That means daily basis you can compare the money and tickets. Verify charges collected for advertisement, slides and shots by reference to registrar of slides and shots exhibited and agreement with advertiser. For example, when you go to any movie, in the beginning they tell that week Vajradanti ನೊರೆ ಬರುತ್ತೆ, ಟೇಸ್ಟ್ ಬರುತ್ತೆ, ಅಲ್ಲಿನ ಗಮ್ಸ್ ಎಲ್ಲ ಸ್ಟ್ರಾಂಗ್. ಸೊ ದೇ give that. Maybe some advertisement with respect to car. Multiple advertisements are being given. That as advertisement is being collected, money is being collected with respect to those things. So that has to be verified. Is it as per the agreement by the cinema hall owner and the other party? Both expenditure incurred on advertisement, repairs and maintenance, and no part of such expenditure should be capitalized, because advertisement is a recurring expenditure that should not be capitalized. So depreciation on the machinery and furniture has to be charged an appropriate rates, because one of the very important asset for the movie is that projector that is projecting the movies, that will diminish immediately. Immediately means very short period of time. If they tell that 10 years is life, that will be 2 years, because you run multiple shows on a day. Again, if there is any good movie, you try to run one extra show. That is why it should be depreciated appropriate rate. Both payments and accounts of films hire with bills distributors refer to agreements concerned. Okay. If you give any advance to the distributors, like there somebody already shooting the movie, okay sir, you give me first right with respect to this thing, take 20 crore rupees as advance. If you try to give an advance, that has to be accounted properly. And restaurant income, that food and beverage, popcorn, coke, tea, coffee, that also has to be checked. First of all, when I say restaurant income, is the restaurant being run by theater owners, or is it outsourced? If it is outsourced, how they are collecting the revenue? Is it on a rental basis, or is it on a percentage of total sales basis? So how they are doing it? If it is by the entity only, then that every items has to be kept in a proper custody. Popcorn item packets, coffee packets, sugar packets, everything has to be kept in a proper custody. These are the things which has to be verified in case of cinema. NGO, audit of NGO. What is NGO? Non-government organization. Sir, what is non-government organization? Any organization which is run by other than government people, or where not more than 51% are equal to, not more than equal to 15% is held by government. That is what we call it as non-government. Government to be part of government, then more than or equal to 51% has to be held by government, state, central, everything. So the NGO is also called as sometimes non-profit organization, which is working for some social objectives like education, healthcare, relief, what is this, environment, maybe protection of animals, protection of the human rights, all those things. So society, NGO can be registered as society, or it can be registered as trust. It is up to the thing. If it want to go for corporate type of entity, then they can even go for Section 8 company also. What is the main source of funds for the NGO? Mainly the promoters contribution. Who is becoming the member, they will contribute some money and become the member. Again, they get some voluntary contributions whenever you go to, like for example, some Isha Foundation, multiple things are there. When you go, you will put some in the hundi or somewhere the money and the plate, that is voluntary donations. Revolving funds. What is revolving funds? Take money from one time, again give it, again take it, again give it. This is revolving continuously. Grants, donations for assets, or in-kind contributions or goodwill or services, goods or services. When you go to Tirupati, people will contribute not only the money, people will contribute the gold also, people will contribute everything. That means donations can come in money also, kind also, doesn't matter, everything is donations. Application of funds, establishment and admin expenses, maintenance office expenses, program or project expenses, charity and donations and contributions. Everything has to be properly applied. Audit provisions, societies. If you are a society, follow society provision. If you are a trust, follow trust provisions. If you are a Section 8 company, Section 8 provisions, you have to follow that. Now, how do you plan the audit? This is important. Planning the audit. First, you should try to understand the NGO. So, what is the mission of NGO? What is the vision of NGO activities and operating environment? Legal compliance, update the knowledge of relevant laws and regulations. It is not just the knowing, it is even continuously updating on a continuous basis. You learned NGO rules 10 years back. Now it is totally changed. You keep on updating it. Organizational documents. You should review MOA, AOA or legal structure. MOA, AOA is for Section 8 company. Legal structure is for maybe trust or society. Study the structure, manuals, project guidelines, funding requirements, and as well as budgets. Minutes review. If you have any doubts with respect to any items, you can even go and review the minutes of the board or committees. And you should evaluate accounting system. Is it and internal controls as well as checks. When I say accounting system, are they following accrual? Are they following cash basis? Are they following electronically? Are they following physically? And internal controls are like whenever some money is being there, is it sanctioned by appropriate authority? Up to certain amount is by one level, one more than certain amount is again by one more level people, that everything has to be checked. Then materiality, fixed materiality levels for audit. Okay, you decide materiality is very important. SA 320 is talking about materiality. You fix some amount as materiality or maybe some percentage as materiality. For example, you decided 1% of sales as my materiality. Here sales will not be there. 1% of loans or 1% of assets are, even if you tell this thing, then based on that, less than that, ignore it or try to accumulate, compare with the total thing, then check it. Decide nature, timing and audit of reports. Consider involvement of experts and the reports. If you are not expert in any area, go and bring some experts. Essay, which essay? Using work of auditors expert. 620, sure. 620 only. And if you want, you can even review the last year's report. That is not there for your syllabus, 620. Then NGO audit program and what verification. As a auditor, verify the donors letters, check interest income with the investment records, is it matching or not. For example, there is an investment of 10 crore rupees invested at 10%, but whenever they get the interest, they get only 90 lakh rupees. Actually 10 crore rupees into 10% should be 1 crore. Actually 90 lakh has come. Why? Verify that. Verify transfers with the donors approval and the board resolutions. Check adjustment on sale of assets. Okay. Earmark funds. Whatever earmark means, set aside funds. If you keep it for any special purpose which are given by donors, you should use it for only that thing. For example, like I contribute 5 lakhs, 5 crores. So you do this 5 crores only for old age people. Don't use it for any other purpose. Scholarship, education, don't do that. That has to be checked. Again, verify expenses as per the donors agreement. Donor also told that 20% you can spend it for this, 30% you can spend it for this. Agreement based on that you verify. Verify that loan agreements and scripts. If he has borrowed. Again, check purchases or sale or depreciation approvals. Verify ownership title deeds. Verify register and physical existence. Ensure NGO's name. That certificate should have a NGO's name. Conduct physical verification of cash in hand. Check bank reconciliation statement because you want to check the bank balances. Do the physical verification and as well as obtain the management representation with respect to this thing. Again, check donor condition as well as agreement. Ensure TDS compliances. Verify PF, ESI, statutory dues, GST, IT, etc. Check admin expenses. Verify with the donor letters and agreements. Okay, this can be done. This is it is not for examination. I just gave it for your to understand it purpose. What is the purpose of doing all those things? You should remember only this part, audit procedure and this thing. This is for understanding. Verify the investment records, registers, rate of schedule, etc. etc. This is about charitable, non-government organization, non-profit organization. Then sole proprietor and partnership form you read it, LLP also you read it. Only one thing which I'll discuss is government audit and local body audit. Now we will begin with government audit. Sir, what is government audit? Sir, government only doing the audit. Do we need to do the audit of government? Yes, because government has all the money of taxpayers and they should spend it wisely. Whether they are correctly spending it or not, we have to know it. That is why government has to be audited by an independent authority called as C&AG, Comptroller and Auditor General. So he is a person who is responsible for specifying what accounts, how accounts and auditing of everything. So with respect to CAG, also some points are there here. What are the rights and liabilities of CAG? What are the who is CAG is appointed by which party? Again, CAG can be removed or not. Again, what is the age limit of CAG? All those things are there here. then rights and liabilities of those party. Then government audit also is consisting of some types of audit, or this efficiency, economy, effectiveness, supplementary audit, propriety audit, etc. are there, which we have to see here. It is an objective, systematic, professional and independent examination of financial, administrative and other operations of public entity, conducted after execution of activities to evaluate, verify performance and compliance. For example, they told sir construction of this 10 kilometers road needs 100 crore rupees. After completing that road, verify whether that is completed within 100 or at 100 or more than 100. You have to verify. Again, there should not be any expenditure unless until it is approved by Parliament or state legislatures, and funds can be drawn from either Consolidated Fund of India or state list or Union Territory list. Then what is consolidated fund? Whatever the money we pay to the government, every money will go to and fall in that account only, even a single rupee also. So post expenditure, you should be examined by PAC, Public Accounts Committee. So authority of audit is C&AG. What are the objectives of government audit? Objectives of government audit is auditing the public funds, appraisal of government policies, basis for corrective action. What is accounting for public funds? Funds which are collected from the public with respect to tax, penalty, all those things that has to be checked here. After that, appraisal of government policies. Whatever the policy government brings, for example, PM Kisan, PM something. So is it correct or not? You should appraise that, verify that. Then basis for corrective action. If it is not correct, then try to correct it. That is what the main purpose, objective of government audit. Ensure proper accountability and reporting of government funds are being done. Evaluate operations, management, programs and policies. Ensure accountability of officials. You should verify that. And audit findings identify lapses, enabling higher authorities to take corrective measures. C&AG, how he is being appointed, who will appoint everything. So he is appointed by President of India, and if you want to remove him, you can remove him only under proven misbehavior or incapacity. Sir, 5 years over, 2 years or no. You can remove only with this proven miscapacity or incapacity or misbehavior. It requires 2/3 of the majority in both the houses of parliament. The same as Supreme Court judge. If you want to remove the Supreme Court judge, then also same. What is 2/3 of the majority in both the houses? There are 545 MPs in Lok Sabha, then multiplied by 2/3. So many MPs has to vote to remove the C&H, then only that is possible. And when I say 545, it is not exactly 545 that is required to vote. Whatever the members who are present in the parliament into 2/3, not total this thing. And what is the tenure? Fixed the tenure, salary is equal to Supreme Court judge. And he should always ensure that independence. He should not be connected to any company, any audit firm or anything, because of which he should not get independent. 149 article, 150 article, 151 article, 3 articles important, defines what are the duties and powers of C&AG under 149. 150 is talking about you should tell to the president on accounts of union or state maintained from prescribed by president of on advice of C&AG. If you want to tell to any government departments, or you should maintain accounts in this form, not in this form, then you should tell it to the president. President will consider that as thing. 151 is CAG report submitted to president. CAG will submit the report to president, then president will put it under parliament or state legislature, so that whether it is modified opinion, unmodified opinion, everything has to be corrected there. What are the duties of CAG? Important part. You should compile the accounts. What is compilation of accounts? Compile and submit accounts of union, states, collect and consolidates information from relevant authorities. Whenever he is there, okay, 10 departments of state government is there. Combine accounts and prepare one consolidated accounts of state government and audit that. General audit. Audit of expenditure from Consolidated Fund of India, State Fund and Union Territories Fund for legality, proper utilization and compliance. Also audit contingency fund, public accounts fund and trading fund, everything. What you are going to audit? You are going to audit every financial statements along with mainly contingent fund, public accounts fund. Mainly these two things are extra. You have to audit. Substantially financed bodies. Audit bodies substantially financed by government. Substantially financed means there are two conditions: giving a loan or grant of more than or equal to 25 lakhs, and it is and not or more than or equal to 75% of total expenditure of the entity. If these two things are there, sir, my total receipts or expenditure is 30 lakh rupees, out of which 25 lakh rupees is given by central government only. You check first condition, 25 lakh rupees or more, that means I receive 25 lakh rupees, first condition satisfied. What is your total expenditure? So 30 lakhs, out of which 25 lakh rupees is given by central government. 25 by 30 is what? How much? 83 percentage. Divided by 6, 6 is 36. Okay, around 75-80% is 75 plus 1 is there. So if both the things are matching, then only it is called as substantially financed bodies. As an auditor, you should do audit of grants and loans, audit of receipts and stores and inventory, and audit of government companies. Mainly powers of C and AG are: he can inspect any government office and accounts, managing officers maintaining primarily for subsidiary records, can demand accounts, books, papers, relevant documents for the audit of specialized location. Sir, R1 department, R1 subsidiary is there in one Himachal Pradesh on top of everything. Sir, how do we get the books? No, I don't care, you go and get the books. However you brings, I don't care. Again, you may ask any questions, observe, make any observation, call for any necessary information from responsible officials. If you want explanations, you can get it. Similar to 143.3 only. So can inquire, can dispense with the details of audit considerations or transactions which may selective or implied checks as deemed appropriate. If he feels no, I should not include this thing, I should not consider this, okay, you can drop that. There is no problem. So there are expenditure audits, very important now. Expenditure audit has mainly 5 points. One is audit against the rules and orders. What is audit against the rules and orders? Whether ensure expenditure complies with constitution, laws, rules, etc., covering sanctions, claims, withdrawals, service conditions, pay, allowances, pension, etc. Check consistency in C&AG requirements and proper rule making authority. What is this audit against rules and orders? Whenever somebody tells do this, does that person who tells do this, does they have authority or not? You have to first check authority audit. Then audit against sanctions. If they sanction any money, he should verify the expenditure that has been sanctioned from the competent authority or not. He only should not sanction and spend it. He should sanction and spend it by other parties. Audit against provision of funds. What is provision? Usage of funds. How much money you have to appropriate for something that should not exceed approved budget of any project. What is propriety audit and what is performance audit? Performance audit is mainly based on 3. Okay, what is propriety audit? Proprietary audit is some type of audit in which you treat that expenditure of government as your own expenditure and try to reduce the cost. That is what proprietary audit. Nin swanta ankondi in ಮಾಡೋದಕ್ಕೆ ಎಷ್ಟು ಖರ್ಚಾಗ್ತೈತೆ ಅಷ್ಟೇ ಆಗಲಿ. What is performance audit? Any audit which satisfies 3 things. One is economy, one is efficiency, effectiveness, and third one is efficiency. Where is efficiency here? Yeah, first point only efficiency. Efficiency, economy, and effectiveness. Sir, what is economy? Acquiring at a less possible price is called as economy. Efficiency means what? Efficiency means I plan to complete in 10 days, but I completed in 9 days. I wanted to spend 50 lakhs, but I spent only 40 lakhs. That means getting more results at the same time or same results at the less time is called as efficiency. ನಾವೀಗ ನಾವು ಹೇಳ್ತಿರ್ತೀವಲ್ಲ ನಮ್ಮ ಫ್ರೆಂಡ್ಸಿಗೆ, ನಂದು 1 ಚಾಪ್ಟರ್ ಮುಗಿತು, ನಂದು 2 ಚಾಪ್ಟರ್ ಮುಗಿತು, ಭಾಳ ಎಫಿಷಿಯಂಟ್ ಅದೇ ಬಿಡು. ಎಫಿಷಿಯಂಟ್ ಮೀನ್ಸ್ ಕಂಪ್ಲೀಟಿಂಗ್ ಎವ್ರಿಥಿಂಗ್ ಇನ್ ಅಟ್ ರೈಟ್ ಟೈಮ್. What is economy? Economy is already done. Effectiveness means appraisal of performance against overall target objectives. It is like overall part. Then audit of receipts, stores and commercial accounts. Auditor should verify all the dues correctly assessed, collected and credited. Check adequacy of procedures, detect fraud or double refunds, forced vouchers, review internal controls for demand collections, etc. See, this audit of receipts, stores and commercial accounts are almost same with respect to hotel, hospital, everything. When there is a receipt is an income. Audit of stores means mainly check the purchase receipt, issue, custody, safe, stock taking, purchase, shortages and weakness. Verify prices, quantity, etc. with respect to audit of stores means items, inventories. Departmental concerns that has to be audited. Statutory is done by C and AG, they can appoint. Government companies is done by C and AG, and C and AG, if he wants, he can go for supplementary audit. What is supplementary audit? Any audit conducted within 60 days of submitting the report to the C and AG. This is about audit of government entities. Local body, I don't want to read it. You can read it. There is nothing great in that. One page only. So by this, we put an end to different types of entities audit. Very important areas we discussed. Some 3-4 different types of entity we left it out. You can go through it, but these are the very important part. Did we leave anything in government audit? Any point? All right. So now we'll begin with audit risk. Audit risk is a risk of the auditor. That is why it is audit risk. Risk of doing the audit. So risk of doing the audit. What is the risk of doing the audit? Doing the audit is not risky, but if you don't do the audit rightly, that there is a risky. Expression of an opinion is an primary objective of an auditor. He should definitely give an audit report or express an opinion. But if he expresses something, some opinion which is inappropriate in such circumstances, then that is called as an audit risk. Because you conducted an audit, you started that risk. That is why you that is called as audit risk. Audit risk is an risk of an auditor of expressing an inappropriate opinion when the financial statements are materially misstated is important. Because expression of an inappropriate opinion, I can tell that financial statements are not materially misstated, then he should have expressed what opinion? Unmodified opinion, but he expressed modified opinion. That means he thought it is material. That is why he expressed modified opinion rather than unmodified opinion. You can still protect that, sir. I felt it is materiality is there, perverseness is there. Based on my judgment, I went. But when the financial statements are materially misstated, then you should express modified opinion, but you expressed unmodified opinion. Then you can't defend yourself stating that no sir, I felt it is immaterial. No, it is visible, it is material, it is pervasive. How can you treat it as immaterial? You can treat immaterial as material. That's okay, because you're trying to prevent the fraudulent activities that is going to happen in the future. But if you go the other way, that is not going to happen. That is why only this part is covered in the audit risk. Risk of an expression of an inappropriate opinion when the financial statements are materially misstated. So, risk of the auditor express an inappropriate audit opinion when the financial statements are materially misstated. Now, this audit risk is consisting of mainly two elements. Audit risk is consisting of mainly two elements. One is ROMM. Second one is DR. Risk of material misstatement as well as detection risk. So what is this risk of material misstatement? Risk of material misstatement is also consisting of two things. One is inherent risk and second one is control risk. Sir, what is this inherent risk and what is this control risk? First of all, you tell me what is this overall category? Risk of material misstatement. See, when the financial statement is prepared by the management or accounting department category thing, they should prepare all the financial statements that is free from material misstatement. That is the duty of the management responsibility to do all those things. First one is this inherent risk and control risk. There are certain risks which irrespective of the thing, whatever you do, that is always there. Depending on the nature of the commodities only, that is being present in the risk in that category. But you try to control it. You implemented some control activities, maybe implemented CCTV camera, security guard, implemented laser light, thumb impression, something you try to control it. But after implementing some control activities also, after controlling some this thing also, risk is not fully reduced. Inherent risk is not fully reduced, because of which the left out risk. For example, there were 100% risk earlier. Now you implemented some controls. So that is reduced the risk to an 80%. That means control are also inefficient to control the 100% risk. That is why we call it as remaining 20% is a control risk. After controls are turned out to be ineffective, you appointed somebody to do the verify everything, try to prevent, detect everything to do it. But after that also, because of some inherent limitations of the process of audit, he can't detect and prevent 100% of the things which are going to happen. That is why there still exists some risk. That is called as detection risk. If you combine all the three risks, then we call this risk as audit risk. Sorry, if I just ROMM, risk of material misstatement, is it related to auditor? No, it is not related to auditor, because auditor has not yet entered into the concept of risk of material misstatement. There is inherent risk in the company trying to control that. They only implemented some control activities, that is not controlling the entire thing. But when you enter the thing stating that I'll try to control everything, I'll try to control the reasonable things, but you fail to control that, then it is your risk. The put together total thing is called as risk of material misstatement and detection risk. Totally it is audit risk. So audit risk is the risk, say material misstated, the auditor fails to express an appropriate opinion on an audit assignment. Audit risk equal to risk of material misstatement multiplied by detection risk. ROMM equal to internal risk, inherent risk and control risk. Sir, how do we, why that is being multiplied? If I give an example, in the regular class we discussed in detail, but it is summary, we'll try to keep it a bit short. The example is like, consider there is a supermarket where around 100 items are missing on a daily basis. Can I call it as it is inherent risk, because the commodity is such a small thing, people will tear off the cover, put it in the mouth and they go away. So that is why that 100 chocolates are going to miss on a continuous basis. That is inherent risk. You can't do anything with respect to that. So to control that, we implemented some controls. Controls are like, we'll put it in a jar, that is kept at the cash counter place, so that people will not take it, eat it, or they try to pack it in a box. Something they're trying to do it. That can prevent 80% of the thing. That is why control risk is 20%. 100%, 100 means I'll take it as some 30%, 20%. After that, you appointed some detector. That detector is trying to control, prevent all those activities by himself. That still there are some 10% risk is left. So if you put together 30 multiplied by 20% multiplied by 10%, or 30 multiplied by 20% is ROMM, and 30 multiplied by 20% is 6%, multiplied by 10%, multiplied by 10%. So that is equal to 0.6% is the total risk of the auditor. Sir, why don't you consider 100 units multiplied by 100 units, again 100 units? No. Out of 100 units, your controls are already sufficient to prevent 80 units. That means remaining 20 units purpose that only you are appointing an auditor. 80 units are already secured. Auditor does not need to do anything with respect to that 80. Only 20 has to try to detect it, prevent it and do it. After out of the 20 also try to prevent, consider maybe some 16 or maybe 18. Still 2 units are left untouched. That is what the risk of an auditor, because he already prevented, detected 18 units. ಅದರೊಳಗಡೆ ಏನು ರಿಸ್ಕ್ ಇಲ್ಲ, ಇನ್ನು ಕಂಡಿಡದೆ ಇದರೊಳಗಡೆ ರಿಸ್ಕ್ ಇರೋದು. So risk of material misstatement is ROMM multiplied by detection risk, or ROMM is nothing but IR multiplied by control risk. So it is an auditor to keep audit risk at an acceptably low level. Detection risk must be inversely adjusted based on an assessed ROMM. Higher the risk of material misstatement, lower the detection risk required, more the extensive audit procedures are required. For example, the moment you know that ROMM is more, you try to do more audit procedures. The moment you do more audit procedures, the detection risk automatically comes down. Or when the ROMM is less, you try to perform less audit procedures, because of which your detection risk will automatically increase. So that is why risk of material misstatement and detection risk is inversely related. So risk of material misstatement can be at two levels. One is financial statements level, second one is at the assertion level. Sir, what is this financial statements level? Financial statements level is a level in which this risk is subsisting in majority of the items of the financial statements, like an entire financial statements as a whole. But what is this assertion level? Assertion level is something in which there are only one or two points, maybe inventory, maybe fixed assets, maybe cash in hand, maybe cash at bank, maybe other things, liability things. There the risk might exist. That is what we call it as assertion level. Assertion level is items wise. The financial statements level is the entire financial statements as a whole. Read those 4 points. So we are at the end of the marathon. We're discussing the last chapter, that is audit of items of financial statements. See, as an auditor, I know that I am mainly concerned with the expression of an opinion on what? On whether financial statements are materially misstated, whether they are prepared as per AFRF or not. I agree. But every financial statement item is not having the same importance in financial statements, is having with the other category of financial statement items. For example, maybe some miscellaneous expense might not be so much important to an auditor compared to the share capital. Some salary or rent expenses may not be so much importance to the auditor compared to the sales or purchases category. So that is why every item of the financial statements is to be verified with multiple assertions. So what is that assertion? Assertions is nothing but the representation that is being made by the management with respect to multiple items of the financial statements. So when I say multiple items of the financial statements, what financial statements we are considering? We are mainly considering two financial statements elements. One is balance sheet item, second one is profit and loss account. The highest number of items are there here is balance sheet items only. Only few, some 4-5 items are there with respect to P&L items. Out of all those items, we will discuss only those items which are very important from examination angle, and you can easily remember by going to the examination or even reading or practicing it. So there are mainly, first we should understand what is assertion. Assertion means it refers to the representations by management, maybe explicitly or implicitly, I don't care, but they made a representation that are embodied in the financial statements as used by the auditor to consider the different types of potential misstatement that may occur. What are the assertions available? There are 6 assertions are there for balance sheet items, and there are 5 assertions are there for P&L items, out of which 3 are common. 3 under balance sheet, 3 under P&L are common. Sir, what are those 3? We will see it later. First, we will see specific items. Did we create any code, mnemonic code for that? What is it? BCC? PC square? PC square is for what? Okay. VER PC square OM. Mob PC. PVR credit card and existence. PVR credit card in existence. Sir, what is this PVR CC? There are balance sheet assertions. P is presentation. V means V is an verification. What? Valuation. R is rights and obligations. C means completeness, cutoff, and existence. If you go for the specific points, existence, valuation, and rights and obligations are specifically there for balance sheet items. And when you go for the P&L items, occurrence and measurement. Occurrence and measurements are 2 specific items, that is OM. So, okay, we'll not keep this everything. We'll discuss 6 items are there for balance sheet. Whenever you get a balance sheet item, you try to verify these 6 elements. First one is existence, valuation, completeness. Okay, completeness, cutoff, presentation, and disclosure we'll discuss at the end. We'll keep it at the end. So, existence, rights and obligations, and valuation. Existence, rights and obligation, valuation. Existence, rights and obligation, valuations. Then completeness, cutoff, and presentation and disclosure. These are the 6 items are there for balance sheet verification. When it comes to P&L items verification, occurrence and measurement, and presentation, disclosure, completeness, and cutoff procedure. These 3 are common for both the things. Here, existence, rights and obligations, and valuation is there for balance sheet. Occurrence and measurement is there for P&L. Rights and obligation, completeness, and cutoff is there for both the things. 3 plus 3. That means 3 plus 3 for balance sheet. 2 plus 3 for P&L item. Sir, what is this existence in case of assets? all the assets and liability and equity balances whichever it is shown in the balance sheet, that has to be exist at the period end. You can't tell that, sir, I had is not having any value. I have is having only value. Completeness. What is completeness? Whatever the entries, whatever the purchases, whatever the sales, whatever it is required to be. Okay, first we will, rather than completeness, we will go for valuation. After existence, we will see valuation. What is valuation? Valuation is something in which you record all the you value all the inventories, all the balance sheet items at the balance sheet date end. So assets and liabilities and equity balances have been valued appropriately. Sir, what is valued appropriately? If you are talking about the property, plant and equipment, I am talking about AS10. If you are talking about inventory, I am talking about AS2. If you are talking about investment, I am talking about AS13. You should value that as per the respective standards. There has been no overstatement or understatement because of the wrong valuation. Valuation as per inventory tells that cost or NRV whichever is lower. Cost is actually lower, but we recorded NRV value. That means it is overstated. When it is overstated, again it is a misstatement also, because ACPD difference has come. You should have written 10 lakh, but you have written 10 lakh. Amount is also wrong. Classification is also wrong. Then rights and obligations. Sir, what is this rights and obligation? Whatever the assets and liability that is being shown in the company's balance sheet as on the date of balance sheet, on all those rights and assets and liability, rights and obligations are there with the company only. You did not enter some rights and assets which are held by somebody else. You are only holding that rights and assets and liabilities. That is why you are recording that in the balance sheet date. That means you can't record something which you don't have. Nemo dot quad non-habit in CA in foundation law. We used to discuss that. Nemo dot quad non-habit. You can't give something which you don't have. You can't record something which you don't own. That is called as rights and obligations. Then completeness. What is completeness? Whatever the entry has been, or purchase, sales, everything has been applied in the current year is completely entered in the current year only. What is cut-off procedures? Cut-off procedures means only entries which are occurred in the current year only are recorded. That means 31st March is the cut-off date. Any transaction which occurred after 31st March, any transaction which occurred before 1st April are not recorded in the financial statements. Is called as cut-off procedures. Then presentation and disclosure. In the financial statements as well as notes to accounts, you should appropriately present and disclose. For example, in case of asset side, first you write assets, non-current assets, PPE, intangibles, again PP under development, intangible under development, again investment, again lease assets. Some you have to write it in a presentation and disclosure format. In P&L also, okay, sales, other income, purchases, all the items, rent, everything has to be in a certain format. Generally, it is for Schedule 3 format. It has to be there. These are the 6 assertions which has to be verified as an auditor in case of balance sheet items. So first one which we are going to discuss is audit of share capital. Sir, audit of share capital means it is again a balance sheet item. How do you audit? This is very important. They may ask this as examination. First we are going to verify existence. What is existence? It is the sum stated in the memorandum as the capital of the company with which it is to be registered, being maximum amount in which it is authorized to raise by issuing shares upon which it pays to a stamp duty. What is the existence? Whatever the shares that is being existed as of the balance sheet date, you pay the stamp duty for that, and you raised only that amount of shares which is maximum you can raise within the limit only. And then what is completeness? That means whatever the issued capital is there in the current year, whatever the subscribed capital is there, only those things in the happened in the current year has been recorded here. That means the part of authorized capital which is offered by the company for subscription and includes the shares allotted for consideration other than cash also. This, if it is shares allotted by the company for consideration other than cash, has to be given by of note if you, as per Schedule 3, if you remember that. And presentation and disclosure. What is presentation and disclosure? Has to be done as per Companies Act, that is Schedule 3 format. In simple line, if you want to understand. Completeness and valuation comes. Tally the period and share capital balance. Authorized, issued, paid up share capital to previous year audited financial statement. That means current year 1000 is there, 800 is there in the last year. Compare it with the last year. Then check issued, bought back, cancelled, resubscribed. All those things has to be checked. In case no change during the current year, then obtain a written representation from the company secretary that there are no changes in the entity share capital during the year, because company secretary is responsible for all those activities. Then in case of there is any change, then obtain a certified copy of the resolution passed at the meetings of the board of directors. Sir, we want to issue some extra share capital. Okay, where did you decide? Sir, minutes of the board meeting. Okay, give me the minutes of the board meeting. shareholders authorizing the changes in the issue of share capital. Then verify whether the period of share capital at the period end is within the limits of authorized share capital or not, because authorized share capital is the maximum capital that a company can raise, beyond which company can never raise that capital. That is for share capital, existence, completeness, presentation, disclosure, valuation. Sir, we did not discuss the rights and obligations. No rights and obligations will come for share capital, because that is not an asset, that is not a liability, that is an equity capital category. Then comes the reserves and surplus. Sir, what is this reserves and surplus? Mainly existence, valuation, and completeness. You should tally the opening balance of reserves and surplus to the previous year audited financial statements from additions or utilization of in current year. In case of profit and loss balance, trace the movement as disclosed in statement of changes in equity to surplus or deficit as per income statement for the year under audit. That means current year statement of changes in equity, what happened? You trace it to the surplus or deficit. Why surplus or deficit? For example, if you check P&L, if you check, so whenever there is a profit and loss account and there comes a profit, there is something called a statement of changes in equity. Whatever the profit is there, that is belonging to the shareholders only. So whenever there is a profit which is not being distributed, that is part of statement of changes in equity. That is why when there is a statement of changes in equity changes, then you have to verify the profit and loss account. Is it correctly reflecting or not? That also has to be verified. Then for adjustment related to dividend payment and tax related thereto, dividend distribution tax, now it is not there. Actually, it should, actually this point is only not there in practical, because DDT is not there. Now dividend is taxable in the hands of shareholders. Earlier, the company only used to pay the tax on the dividend under section 115 I think 1150. Then they used to pay the remaining dividend. Verify the resolutions passed by board of directors regarding the declaration of dividend. That means the moment you declare a dividend, where is your proposal letter, where is the approval by the shareholders, all those things has to be verified. It should be noted that as per Ind AS 10 or AS 4, that adjustable and non-adjustable, if the dividend to holders of the equity instruments are proposed to be declared after the balance sheet date, the entity should not recognize those dividends as liability in the balance sheet date, because there were no events which are present on the balance sheet date as per AS 4. AS 4 tells that something is adjusting event only when it is existing on the balance sheet date, and some event occurs after the balance sheet date to confirm an existing event. But you are conducting an AGM to declare the meeting, dividend, and to approve, what is that, to propose that also conducting board meeting at some maybe after April, May, June, July, somewhere else. That is why that should not be adjusted. That is the next period item only. Presentation and disclosure, schedule 3 has to be done. After that, okay, here I think it is not entered. Few things like employee stock option plan and split equity share, again buyback of the share, all those things has to be checked as per the respective sections. Section 54 for split equity shares, again 68 for buyback, further issue of shares, all those things. When you are going for buyback of the shares, you should check that what is the sources of funds. Is it from the issue of new shares? Is it from the profit of the last year or current year? If you are taking from the profits, then you should transfer amount equal to nominal value. After the buyback, you should not draw more than 10% of the thing. After the buyback also, the amount drawn should not be less than 15% of the paid up share capital put together. There are some conditions as per 68. I think it is not there here. Please go through that when it comes. Then we'll continue discussion on this. First, they have given it is borrowings. Borrowings. Borrowings is again an balance sheet or P&L item. Balance sheet item only. You should first review the board minutes for approval and authorization of new lending arrangements, agreements. whether they have the right or not for borrow the money. Ensure that significant debt commitments should have been approved by the board of directors. What is significant debt commitments? Significant means major items are approved by the board of directors only. They are not just borrowed by some low level management. And all the money agreed, the details of loan recorded, maybe interest rate, nature, or repayment, etc., to the loan agreement. Loan agreement is 10 lakh, sorry, 10 years. Here they are writing it as only 8 years. No, that is wrong. Everything has to match with loan agreement. Then verify that whether the company is within the limits imposed by the agreements are not exceeded or not for the purpose of borrowing. Then agree details of lease and hire purchase creditors recorded in underlying agreement. And again examine trust deed for terms and dates of redemption, borrowing restrictions, compliance, covenants, etc. Covenants means conditions. With respect to presentation and disclosure, same, I am not going to discuss anything. It is just as per schedule 3 has to be discussed, presented. But only thing is you have to properly classify, that is long term as well as current borrowings. What is current borrowings? Any borrowings which are repayable within 12 months from the date of balance sheet is called as current. If not, other than is called as non long term. Then comes valuation. Whatever the policy, whatever the method you apply, that has to be applied consistently throughout the years in case of valuation of borrowings. Recalculate the interest accrual, discount or premium on redemption. For foreign loans, you should even check what is the translation calculations also, closing rate exchange, translation calculation. Why it is closing rate? Because borrowings is a monetary item. All the monetary items has to be bought to the closing rate of the balance sheet. If it is non-monetary, again average rate or beginning rate, differences are there as per AS11. Again check the computation to the amortization of premium or discount. And then comes completeness. Obtain a schedule of short and long-term borrowing showing that beginning and ending of the balances. What is the beginning? What is the repayment? What is the interest accrued? What is the interest paid? Consider any evidences of additional debt obtained through examination of minutes of the board, significant contacts, confirmations of the bank accounts, and support for subsequent cash disbursement. That means you actually borrowed 10 crore rupees, but you told, okay, give me 5 crores. Later I'll approve for another 5 crore rupees. Then you can go that. Test for summarization and trace the ending balances to the general ledger. What is general ledger? Like ultimate borrowings account. For each lender, the client had a debt outstanding at the previous year end. During the current year, prepare or have a client prepare a confirmation request for the amount owed to the lender. That means at the balance sheet end, you start in the 1st April till 31st March, you repay it, you borrow it anything. At the 31st March, you take one confirmation from the lender. So this is what your outstanding amount. You have to be taking for all the years continuously, for last year also, current year also, keep on doing that. And company is also having some restrictions with respect to borrowings under section 180 of the Companies Act. 180 1C, if you remember, CARO, clause 3, clause 4, LGSI made to the related parties other than LGSI, the similar things, 180 only. These things are okay. Then comes trade receivables. What is trade receivables? First we will see existence. Ensure that trade receivables ledger reconciles to the general ledger, general P&L. Calculate the receivables report total. Add invoices on the account receivables aging report to verify the total traced general ledger is correct. What is aging report? Up to 6 months receivables, 6 to 1 year, maybe 1 year to 2 years. As per schedule 3, whatever is the aging schedule given, that has to be considered here. Then any significant and important audit activity is to contact customers directly and ask them to confirm the amounts of unpaid account receivables. If the company tells that, sir, we are yet to receive the money, it happened 2 years, 3 years, your doubt, sir, they already received, I feel, but they are not entered here. Then go and directly contact the customer. Are you supposed to pay? Are already paid? When are you going to pay? All those things. If the realization is made on account, verify if the company has obtained confirmation from debtors or not. Realization means receipt. If there is any related party transactions, review them from collectability. Collectability means if there is any uncertainty in ultimate collection, don't record the transaction as per AS9. They tell that revenue recognition. And presentation and disclosure as per schedule 3. How you have to present it? You have to present it for more than 6 months and less than 6 months from the date of invoice. Valuation. You should value at the total debt minus PDD, provision for doubtful debts, that has to be valued. Or you can give one more presentation called as total debts on the left right side, the credit side, and the PDD on the left side. But that presentation is not allowed. You should do deduct there only and give the net amount. And review the process followed by the company to derive an allowance for doubtful accounts. How do you determine how much is doubtful? No, sir, every time this is being happening, that is why we considered it. No, why did you choose extra 10% for this thing, or 1 year less than only here only? Sir, because we felt they are already bankrupt, they are already into the liquidation process. We don't think they are able to pay it. That is why we did it. Okay, and you have to report it like valuation split between 30 days, 30 to 60, 60 to 180, 180 to 365, and more than 365. If there is any bad debts written off, that has to be approved by the appropriate authority, then only we can write off the bad debts. That's okay. Completeness, that's okay. Cash and cash equivalents you studied, there is nothing. Inventories also you studied, there is nothing, but I'll discuss the PPE, property, plant and equipment. This one we will discuss. Fixed assets. First one is existence. Review client's plan for performing physical verification of PPE. Generally, it has to be as per clause 1 of CARO also, they should do it on a reasonable interval basis. What is reasonable intervals? It is up to the client. Maybe 1 year, maybe 2 year, maybe 3 years. Now, whatever I am discussing, just connect this to the inventory also. So assess if all the items of PP are properly tagged and carried identification marks and numbers. For example, this mic is belonging to the firm. For example, if you see here, there is a tag which is there. Mic 1, mic 2, there in the classroom, mic 3, there in the other classroom, that is being there. And verify if there is any discrepancy noted based on the physical verification undertaken in the manner compared to the books of accounts. For example, in the books of account, they told 10 mics are there, but in the academy, there are only 8 mics. There is a discrepancy. How they are being dealt in the books of accounts? No, sir, 2 mics are went for repair. They'll come. Okay, once they come, please let me know. Then I'll agree for that books of accounts. If not, reduce the 2 mics in the books of accounts, make it as in 8. Then completeness. Verify the moment of PPE schedule compiled by the management. What is moment of PPE schedule? Opening, property, plant and equipment, class by wise, furniture, computers, again buildings, land, everything is there. And opening, add purchases minus income tax, you do it right. The depreciation calculation part. So minus sales. Then on the net amount, what then you calculate the depreciation? Is it more than 180 days, less than 180 days? Again depreciation changes, again closing bills. That moment from opening till closing, how it is being happening, you compile that. Check any arithmetical accuracy for the moment of PPE schedule. And tally the opening balance of the previous year audited financial statements. Then valuation has to be done at what? AS10. Verify the entity has charged the depreciation on all items of PPE except for non-depreciated items like freehold land. Verify that depreciation method used reflects the pattern in which assets future economic benefits are expected to consumed by the entity. That means if the entity is going to get the benefits on that asset, 10,000, 20, 30, 40, again 10,000, then you should not charge on SLM basis. You should charge on number of units basis, because the future economic benefits are at a fluctuating or increasing method. That is why it is not good. Verify if the management is undertaking any impairment assessment or if any PP is impaired. Yes, for which standard? Yes, 20 impairment. Sure. What is 26? What is 29? Okay. What is? How do you do the impairment testing? What and what amount will compare? Don't worry. Realizable value and book value. What is realizable value? Present value of all the future economic benefits or the sales, net sales value. You compare that thing, whatever is higher, put it as realizable value, compare with the book value. If the book value is more, then do the impairment. Because realizable is only 10 lakh, but in the books it is already 12 lakh. Okay, realizable 10 is the gap, it goes bring 2 lakh impairment, then make it as 10 lakh. If the book value is less, realizable value is more. 12 is realizable, 10 is books. Okay, continue to have the 10 lakh only. Don't do it 12 lakh. Impairment means reducing the value. If that is there, then reduce it. Then rights and obligation, all the PP, purchase invoices, etc. Everything has to be in the name of entity only. Legal title ownership of the and the entity has to be there. Original title dates, if there is anything with respect to immovable property, we have to verify as on the balance sheet date. Verify the register of charges. As per chapter 6 of Companies Act, we discussed registration of charge. You have to verify. Every company has to maintain the register charges, the register. Within the with the entity assets, the PP has been given the security. Disclosure is done as per Schedule 3 of the Companies Act, presentation and disclosure. That is with respect to property, plant and equipment, and the same things goes for intangible assets also. They don't know what is impairment. See, then comes intangible assets. Same things, you just change few words. Their depreciation here it is amortization, and impairment testing is also be tested here. But in accounting part there is a difference, like self-generated in goodwill, purchased goodwill. Accounting part there is a difference. How do you account it? Self-generated means don't account it. If it is purchased, then account it. It is not discussed here. Everything as per tangible assets we discuss. Same things for the intangible assets also. Then trade payables and current liabilities. Trade payables is exactly opposite to trade receivables, but we'll discuss. Check whether there are any controls in place to ensure that same purchase or expense invoice cannot be recorded more than once. That means trade payables means what? You should pay the money. Current liability, anything which is outflow is called as trade payables or current liabilities. So any money you are supposed to pay, you should pay only once. Unless until they are your bill, father-in-law, brother-in-law, that continuously money keeps on going from the wife's side. You don't know that, right? And ensure that trade payables the ledger reconciles to the general ledger. If the in the general P&L they tells us 10 lakh rupees, to which party, what date, what is the interest accrued, what is the period outstanding, everything has to be there in the trade payables ledger separately. Again, trace the grand total to the amount in the amounts payable accounts in the general ledger. Then an important audit activity is, if you want, you can go for 505 also, external confirmation. And compare last year closing, current year opening, and changes in the trade payables, receivables, cash paid, cash received, everything. Then ultimately, as in the balance sheet date also, you have it. Again, valuation, you should value based on the aging schedule, the same things which we discussed for trade receivables. Up to 30 days, 30 to 60, 60 to 180, 180 to 365, and 365 and more. That has to be there. And you should give a list of vendors to whom, with whom the company is having the disputes with respect to payment. Check that write backs in the liability balances assessed are no longer payable have been approved by the appropriate authority. If there is any foreign currency payable, then check with the foreign currency translation, and that has to be brought to what? Closing rate and the balance sheet date, because that is also monetary payable item. Monetary item is payable. Then completeness, only for invoices recorded during the last few days closer to the cutoff and which has been included in the trade payables has to be checked, because there are chance of being 31st April maybe 1st April ಹೋಗಬಹುದು or 1st April 2nd April 31st April ಬಂದ್ಬಿಡೋದು. So because sometimes invoice is received early or sometimes invoice is received late. Maybe delivery received early, delivery received late. Depends on that. It is better to have a clear picture on last few days and first few days, because first few days if you check it, last year has not been overflown to the current year, that is being there. Then whatever the goods at the end of year should have been booked in the form of purchases and included in the trade creditors. So no goods received transferred in favor of the entity after the year end should have been recorded as purchase or included in the trade creditors as a period under audit. That means if you purchase anything after 31st March, don't include it in 31st March as a creditors also, as a purchase also. You record in the next year only. After the year end, you should not include in the current year. Presentation disclosure, again schedule 3. Loans and advance, I think I don't need to discuss anything here. No, balance sheet items will stop. We can go for income statement items. Income statement, first of all, assertions are, there are 5 assertions of income statement. P&L or income and expenditure. One is occurrence and measurement, second one is measurement, third one, fourth one, fifth one is presentation disclosure, completeness and cutoff. What is occurrence? Whatever the transactions which are recorded in the P&L that has been occurred in the current year only. Occurred in the current year and related to the entity only. And what is this? Measurement. You should measure accurately at the appropriate amounts in the financial statements. What is appropriately amounts? Appropriate amount means, for example, for I purchased I'm talking about the purchase part. I purchased 10 lakh rupees. At the same time only he gave 5% discount. That means 50,000 rupees is discount there. Then again, if he is telling if you pay within 3 days, then I will give you another 5% discount. That means should I record at 10 lakh, should I record at 9.5 lakh, or should I record at 9 lakh? You have to decide as per the respective accounting standard what should be there. Then presentation and disclosure as per schedule 3 only. So sale of products and services. Check whether a single sale invoice is recorded twice or cancelled sales invoice could also be recorded. You should not record double the single sales invoice, or you should not record some invoices which are cancelled. Whether any shipments were done without any consent and agreement of the customer. Why it happens? If you remember that for the purpose of overstating the sales, I gave an example that company only dispatches the goods by 30th of March, and by the time it reaches to the customer go down or customer place, it happens to be 3rd or 4th April. Then customer sends it back as telling that I did not order. That means by 31st of March we already booked the sale. That is why they try to do it. Then oath the sales journal to the supporting documents. What are the supporting documents? Sales invoice, maybe customer credit sales itandre debtors, etc. Check the sales returns with the sales invoice, challan, credit note, etc. etc. there also. How do you measure it? Measurement happens by way of if there is any export sales, then you should consider foreign exchange gain or loss from the sales as per AS 11. Then you should measure, recalculate the prices and extensions on sales invoices. Trace a few transactions from the inception to the completion from the beginning. That means order received, it is went to the sales department, it went to the purchase department, finance department, everywhere. Then the goods are dispatched from the marketing department or sales department. Again, the invoice has been raised by accounts department, payment has been received from finance department. Starting till end, you trace few transactions if it is correctly there or not. And auditor must also understand client's operations and gap issues. Generally accepted accounting principles. That's it. Completeness means it is like perform cutoff test to ensure that revenues are recognized in the current accounting period and sales were not tampered towards the period end because of the sales target. Auditor will also have to see that credit notes issued after the accounting period, because as I told, they might have sold it to some entity. Later they will issue credit note stating that okay, you send the purchased goods back, I will take you the credit note. Sometimes sales team or sales personnel can make fictitious or ghost sales before the year end to meet the performance target or cancel out some sales post year end by way of credit note. There, you remember that one of my friends, this thing I told, car showroom dealer, if he sells 10 cars, he will be having some bonus, but he sold 9 cars near end, so he booked on the father-in-law's name. That type of things. Ghost means fictitious, who are not in present. It is as per schedule 3 only, presentation and disclosure. Other income, interest, dividend, gain or loss on investment, everything has to be recorded on accrual basis. You see these things are okay. Purchases I am not discussing. I am directly discussing employee benefit expense. So as auditor, you should understand the entity's process of capturing employee attendance. Sir, how they are capturing? Sir, they are having the biometric, they are having the physical register to sign, or they are having the retina scan to happen. Multiple things. There is always a risk of recording expenses for fictitious employees. You remember that MG Narega example I gave Mahatma Gandhi National Rural Guarantee Employment Guarantee. One of my friend's father was a PDO, Panchayat Development Officer. He'll keep 1% to record. Okay, the government guaranteed okay 100% will come for today's work. Only 80% came, but remaining 20% who did not come, they only enter the fictitious name for employee benefit expense. That should not happen here. To address this risk, the auditor may choose to be physically present at the entry gate at any given date and himself count the employees entering the premises on a test check basis some days. Obtain the list of employees at the period end along with the monthly movement split between new hires, leaves and continuing employees. How many are newly joining, how many are leaving the organization, how many are still continuing. Obtain a monthly salary register for 12 months. Compile monthly payroll. Reasonability by calculating the average salary per employee per month compared with the previous year. Okay, you just do some things. In case of PF, ESI are applicable to entity. Compile a reasonability by applying to the rate of basic wages. Whether they are calculating correctly or not, you have to check it. Again, you have to check one more thing, whether they are depositing with the respective authority in the due date of that respective authority also has to be checked. The presentation is schedule 3. Depreciation, amortization, you go through that. Other expense also, I don't think I should discuss. Shares, reserves and revenue versus capital expenditure, no. Okay, shares. Can a company issue shares at premium? Yes, anything which is above the face value is called as premium. That is whenever they receive 10 rupees shares, for 10 rupees shares they receive 20 rupees, 100 rupees. 10 rupees they put it for equity share capital account. It is like capital of the company, remaining 90 rupees will go for shares, sorry, what is it? Security premium account. And that security premium account can be utilized only for 5 purposes. That is given under section, sure, 55. That can be used for only 5 purposes. So first purpose is issue of the fully paid upon shares, buyback of the shares. Then again, what this? Preliminary expenses, issue expenses, and last one is buyback, bonus, issue expense redemption, and the premium and redemption of preference or preference shares or debentures. These are the 5 activities where you can use that security premium account. This is important. That is 52 only. Don't worry, it is 52 only. Can a share be issued at a discount? No, no. I told something is missing. No, it is given at the end. No, shares can't be issued at a discount. Oh, but there are some exceptions. 2 exceptions, not some. One is sweat equity shares you can issue. Second one is reconstruction scheme. You want to reconstruct the bank's loan, all those things to the thing. That is possible. Sweat equity shares as per section 54. Don't worry. 54. Whenever they want to issue sweat equity shares to any party, they'll issue for the purpose of know-how, patent, technology, or making available the rights exclusively for the company. Before you issue sweat equity shares, you should pass a special resolution. What is the current market price? What is the money you are going to receive? All those things has to be checked before you issue anything. If it is a listed company, SEBI guidelines also has to be checked. Revenue reserves, capital reserves. What is revenue reserves and what is capital reserve? Any reserve which is available for the purpose of distribution of dividend is called as revenue reserve. And specifically that is free reserves has to be there. Revenue can be free reserves and specific reserves. Free revenue reserves are available for the purpose of distribution of dividend. Capital reserves are any reserve which is kept for some specific purpose. For example, debenture redemption reserve, deposit redemption reserve, sinking fund reserve, depreciation reserve, all those things. This is okay. That's it. By this, Samba Jainama Parvati. We are winding up. This is what we discussed. We did not discuss 100% of the syllabus, but we discussed more than 95% of the syllabus. You have to do your work now. My work has been completed. I suggest you to go for reading more of question and answer based for this subject and last subject both. Reading once the or this conceptual part is okay, but continuously repeat question and answers. At least 2-3 times you do the question answer, question answer, question answer. Then if you want, you can go through one time maybe at the last concepts. But before you go for the examination, you should be having in your mind question answer, question answer, question answer. And the one important factor which you should always consider is the key exam tips which are given at the end of this every chapter. That you should keep it in mind. You read internal controls, you read audit of automated environment. We did not discuss only these 2 things. Rest everything has been discussed with respect to mainly examination point. So it is my for this. Consider it as my prayer, my request, my blessings. You should clear the examination the first attempt, provided you read accurately. If you don't read, don't clear it, because we want the quality people, the output. And if you have recently seen the notification by ICI, final again got it to 2 levels. Why? Because the quality is not coming because of the 3 attempts. Some party is doing one exam paper or 2 exam papers exemption. The next attempt they are writing only 1 or 2 papers, just relaxing. Then they are clearing. for four months. In 1 year they have to clear it. But when it is 6 months, again they don't want to waste the time. They want to study full group, full both the groups or full course. That's why it is happening. So becoming famous, making money in CA is very easy. The only thing is you should be like irreplaceable. Any problem is there, it should be like, okay, go to him or her, so that you will get a solution. If you are becoming that category of level, then you are sorted. Don't need to worry for anything. Just follow your passion. If your passion is to teach, again you can teach. If your passion is to again go for practice or again go for employment, you do anything, but do it with utmost or this मन लगा के करना अंतरला ತರ. Don't distract here and there. Do something with 100% of mind. I don't. Even Samay Raina's one. This has come. Samay Raina is still alive. Something it was telling. Don't do it with heart. Do it with mind. Because if you do it with the heart and you don't get the expected results, you get attached. Because if you do it by heart and you are get what emotionally broken hurt. So if you do it with the mind, then okay, what is there? Work is different, personal life is different. Try to be detached part of this. Something was telling. So work is work, personal life is personal life. Whenever you are working, keep it working 100%. Whenever it is not happening, don't worry. Again you come back, everything is there. So by telling that, we are winding up the discussion. If you have any doubts, you can contact us. Anyway, my number is there in the group also. If any online people want to contact, you can comment on the video, or you can contact the academy number. We will be definitely solving whatever the queries you have. By telling that, if you saw that video and felt it useful, do like it, share it, subscribe, and share it with all the people who are in need of these videos. If you need any other revisions or marathons, you please comment in the comment box. Anyway, accounts is already uploaded, law is also uploaded already, this audit is also completed. Now the next marathon is going to come as financial management. So stay tuned. By telling that, I am signing off, your CA Veeraj. Bye bye.